This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lisa Mateo on assignment today.
Oh, nice.
Off. Probably getting ready for Formula One. I know she's into it.
Oh, I didn't know that.
I'll be up 1 a.m. the next 1 a.m.
Okay, the next
Saturday 1 a.m. is qualies. They call them qualies.
Qualies? Okay.
It's like where they figure out where they're going to sit when they start the next day.
All right.
Give me a basketball update first before we get to the markets.
Yeah, unfortunately, well, my Dukies won yesterday. Unfortunately, Cooper Flag got injured. We'll see how serious that's going to be. But
you don't know how serious yet.
No, it's X-rays came back negative, which is
Won't
good,
play tonight against UNC?
No, let's hold him out to the big dance is my call.
We'll touch upon that. We're trying to get some distractions here from all that political economics that we're all overwhelmed by, whatever your politics. We've got a great set of voices today to get started here. And, of course, the future's up 44. A nice lift there as well. The VIX 24.08 in the fixed income market. The Sweeney yield, it just won't go there, Paul.
No,
we got to 4% and we're back down 3.97.
Yeah, how about that? I mean, so we're seeing. Yeah, I mean, we got the 10-year Treasury rate at 4.3% here. So rates are just kind of hanging right in there.
The dollar weaker, as we mentioned with Karen Moscow. Gold is the talking point this morning.
Unbelievable.
3006 on what's called the near future, GCA, the generic code on gold. There's different ways to quote gold. It's a little confusing, but
yep.
I'm sorry, we're over 3,000 per ounce, and we'll get James Steele in here and other worthies to talk about it, but I'm sorry, it's a round number. It's like Dow 10,000.
It is. It's just extraordinary. I mean, it's been, Mike McGlone from Bloomberg and Intelligence and Commodity Strategist is saying buy gold and pretty much sell everything else in the commodity space. And
it's going to be an eventful week as we get to the Fed meeting next week and all sorts of other things coming up. Wendy Schiller, Henrietta Trey's will be with us on the politics after the Schumer news last night. So we'll have a lot for you. David Gura up in Canada.
Really?
Yeah.
Okay. Wow.
Road trip up there
Good.
with some interviews, and it'll be a good time to speak. And we're trying to get a lengthy time with Mr. Gura this morning. On your commute across the nation, we say good morning. Good morning, 99.1 FM in Washington, 92.9 in Boston. Good morning. And, of course, Bloomberg 11.3, our flagship here. You see it's dark out?
I know.
Because we sprung ahead.
Exactly.
I feel like it looks like it's November out here.
I know. But at that, it's nice in the afternoon, though. Oh, boy.
Loving
that. Yep.
I don't know what the weather is this week.
I'm a big fan of that whole thing.
You like the daylight
savings time? Yeah. All in on that.
Sam Stovall and I are old school. We want the farmers out there looking a little bit of sunlight. On the equity markets, we start strong today with someone with immense history of these corrections. Sam Stovall joins us here from CFRA. Sam, does a correction lead to a bear market?
Good morning, Tom. Well, not necessarily. Going back to World War II, we have had 23 corrections or declines of 10 to 20%, or I should say 19.9. And these are round trips, meaning that they did not eclipse the 20% threshold and then got back to break even. The amazing thing is the speed with which the market did get back to break even, only 4 months. So by the time you worked yourself up into a frenzy, the market was probably already on its way back to break even.
You're too young to remember this, but I had the clearest memory of the crash in 1987.
Yep.
And the news was, and it's never discussed, Paul, December recovery.
New all-time highs in December after that October.
You go to cash in late September and you run over.
Exactly. Hey, Sam, I mean, I guess, one of the drivers of this pullback in the markets, obviously, has been this level of uncertainty that's been injected into the marketplace, in part due to some of the economic policies from the White House, most notably the tariffs. That's not going away anytime soon, it doesn't appear like. So what does that mean for the market going forward?
Well, that's the $64,000 question, to use another show that Tom is familiar with. I think we're set up for a short-term counter-trend rally. The percentage of stocks trading above their 50-day moving average is 28% for the S&P, 24% for the NASDAQ, and those are in oversold conditions. So I think the continuing resolution, I think the possibility that the Fed might sound a little more dovish, could trigger a short-term pop, but you're absolutely right. This is a manufactured correction, and unless those factors that did push us down are resolved, I think it's just going to be a short-term bounce.
In this stress, if you believe in America, Sam Stovall, are the stars at CFRA, are they efficacious right now, like to parse 5-star or 4-star or 3 stars moving to 4-star? Is that game valuable now?
Well, I think it's valuable. I was going to have to look up efficacious, but
I only say that on Friday. You know, Steve Carroll was on earlier, so you got to use fancy words when Carroll darkens the American door. Continue, Sam.
Well, I do think that the equity analyst recommendations are quite important because just because I mentioned that the speed with which the market tends to get back to break even from corrections or even bear markets, what I have found is that you want to rotate from first to worst, meaning move out of consumer staples, healthcare, utilities following declines of this magnitude, and into those areas that were beaten up the most. Because historically, in the 6 months after such a move, while the market itself was up an average of 25%, now this is corrections and bear markets, the worst performing sectors were up 30%. And the worst performing sub-industries, and there are 125 of them in the S&P 500, were up 44%. So basically, you want to go where the market was beaten up the most. And we've been sticking with 4 and 5 stars in those groups quite a bit.
So, Stan, how do you feel about valuation here? A 10% pullback in the S&P 500. I know a lot of folks were really concerned about valuation before this pullback. Where do you stand in terms of the market's valuation here?
Well, the valuation is still relatively lofty, in my opinion. We are looking at a PE ratio that right now is 20.9, which is actually a lot better than where it was. We're now a premium of only 10% over the 10-year average. We had been around 20%. And if you look at a 20-year average, we were still hovering around 2 standard deviations above the mean. But we have come in quite a bit, and with 2026 estimates still looking to be up 14.5%, that adds a little bit of optimism to investors to buy back into this market.
Is a use of cash and free cash flow study valuable now?
I would certainly think so, because with the market shifting more toward a value equation, and I think that momentum shift is likely to persist, that cash flow, I think, will be very important in the identification of attractively valued companies.
Sam, we're thinking here about this, again, this pullback in the marketplace here. One of the concerns out there is technology, that concentration that had been characterizing this market over the last couple of years with the Mag 7 and just kind of some of the big techs in general. Can big tech, can that be a leader in this market, do you think?
I think it can be, certainly coming out of it. One reason is because earnings are expected to remain fairly strong for big tech. I mean, if we look to 2025 and 26, we're looking at growth rates around 18% for both years versus 9.5% for the S&P this year and 14% for the S&P next year. And with valuations certainly coming down quite a bit, with technology now trading at below 22 multiple for 2026, I think that expectations are still optimistic when this market does finally make a turn.
A different view there. Sam Stovall, folks, that's important in CFRA, where he's looking at quality in 4- and 5-star stocks was saying find the beaten up ones. Look for that research. We don't have it. He has it at CFRA. Look to Sam Stovall at CFRA. Futures up 43. The VIX 24.09. Dow futures up 223. NASDAQ up 1% right now. Do you have any confidence in it?
No, I was just about to say, Tom, we've been sitting here the last several days, you and I, around this time, and we've seen futures in the green. And then at some point during the day, there may be a tweet, a post, something, and it all rolls over.
Completely driven by the headlines. Looking particularly at the headlines in Europe, Maria Vetmane joins us now, head of equity research at State Street. Love having her on with always an eclectic research note. Maria, I think you just absolutely killed it this time around. I had a winter somewhere. I was totally broke, folks, and I read all of Conan Doyle, all of Sherlock Holmes, the whole oeuvre. When you have eliminated, I have to say it with a British accent.
Oh, okay.
Except my British accent isn't as good as Stephen Carroll's. When you have eliminated all which is impossible, then whatever remains, however improbable, must be the truth. That is what's called a massive type 2 negative within the world of statistics. Eliminate the impossible. Maria, brilliant. What's the impossible right now that needs to be eliminated in our analysis of the stock market?
I mean, what really struck me about stock market is that the narrative, if you open any newspaper, Bloomberg, TV, anything, people talk about recession. And yes, we had some numbers that, some like survey data that may be not great. We hear from some CEOs that things are difficult. We worry about tariffs. But if you look at underlying corporate profit estimates, they're still very robust. And we're even seeing some upgrades. And really the place where we're seeing the more substantial downgrades is really small caps, but nowhere else we're seeing that. And I think this is really, really interesting. And if you want to take it further out, I mean, if you think about global economy and the impact of tariffs is really uncertain and nobody can make predictions, and it's not very clear what it does to US. So maybe not revising that very much. But Europe is spending more money, China is spending more money, so you can create actually quite constructive earnings story. And that, I think, is something that market is really not giving a lot of thought about.
You look at Europe. I saw Rick Reeder over at BlackRock talking it up as well. Paul, moments ago, Merz, the new leader of Germany, reaching a tentative deal within their parliamentary system with the Greens.
Yep.
I'm going to editorialize the Liberals on a fiscal package. So there's another step
moving
towards
forward.
a different Germany.
A different Germany. Maria, are we at the point here where we can think about buying this dip here if, in fact, economic conditions could remain pretty solid, and that means earnings could remain pretty solid? Is this a buy the dip opportunity here?
I mean, that's exactly what we're seeing in our indicators. So looking at State Street custodial database, of course, we saw big outflow from those kind of really extended positions. I mean, only 3 months ago, we talked about U.S. exceptionalism, and that was the trade. Investor had big overweight in stock, in U.S. and tech. That got like unwound to a large degree. And what is really interesting, over the last week or so, we began to see investors coming back. And what's interesting, so when people sold the U.S. tech, what did they buy? They bought European banks on exactly the expectation of new Germany, new Europe, European banks, European aerospace and defense. Those positions are really crowded. And I mean, to just shock you a little bit more is that the of benchmark holdings, so relative to the benchmark, allocation to European banks now is bigger than allocation to U.S. tech.
Wow.
I mean, isn't that surprising?
Yep.
So that's your crowded trade.
Say
that's
that
your
again.
risk trade.
Stop the
So
show.
relative to the benchmark, of benchmark position in European banks is bigger than U.S. tech. So a lot of adjustment has happened, and a lot of concentration risk actually now in Europe, not in U.S. And we see people kind of unwind, so coming back to the U.S. trades.
So I want you to say that a third time. I'm kidding, Maria. It's Friday here, Maria, early morning in New York. Maria, what's so important here is people, they're bouncing off the politics of Europe and, frankly, Asia and the United States. It's minute by minute. I mean, we're all like, how deep are we into 2025? We're like way in. We're like 7-8 months in. Maria, how do you invest with the headlines bouncing hour by hour?
I mean, it's really interesting what you mentioned. And of course, headlines hour by hour and the most kind of spoken about narrative is, of course, trade and tariffs, and it's really unpredictable. But when we systematically measure this narrative of how often it's talked about every day, and then we regress stock market on it, and actually, this correlation has really, really come down. So if you say a couple months ago, that was the thing to drive market. I think by now, I don't know, either market is exhausted, positioned for it, doesn't see it as a permanent. This correlation really come down. So it's not tariff news that matters. It's much more what matters is the topics we pick up are profitability, corporate profitability. So the thing I spoke about, consumer spending is really important. So those kind of underlying economic topics are actually more important, and that's actually great for us analysts. Actually, this is something we can get our teeth into and analyze and get good rid of it, other than tariffs.
I got one more question. I came in this morning, and Michael Barr's reading Friedrich Hayek. I don't know what that's about, but Maria, with your fancy degrees from Europe, if Friedrich Hayek says, to an extent Schumpeter as well, that we're gonna clear the markets, as we clear the market, what's the tail risk look like in your statistics? I mean, as we go through this process of clearing our political economics, is the tail risk just too much to invest?
I mean, that's our job to invest. So that's probably not an answer for lots of people. So it's selectivity. So I mean, I still want to be in high quality companies. I still want to be in large cap companies, in companies that produce profits year in and year out. So tech was a dominant story there. So that's your quintessential quality, but maybe there are more defensive quality companies as well. So maybe healthcare, maybe some staple companies. So I think we might see a little bit of a rotation, but quality tilt is really, really important, and that's what we're trying to do in our portfolios.
Brilliant, Maria. This was great. Sam Stovall to Maria Vetmanje is the way to go. She is with State Street this morning. Thank you for that. A great European perspective. Futures up 42, the VIX 24.12. Now it's the road to the news. Here's Michael Barr.
Thank you very much, Tom and Paul. Senate Democrats appear to have reversed course in a bid to stop what they call a bad continuing resolution that keeps the government afloat until the end of the fiscal year in September. Senate Democratic leader Chuck Schumer says there will be enough Democratic votes to advance the House CR today. Schumer said Democrats really didn't have a choice because a shutdown would have far worse consequences for Americans.
Either proceed with the bill before us or risk Donald Trump throwing America into the chaos of a shutdown.
The government will shut down just after midnight if Democratic senators oppose it. An American Airlines passenger jet diverted to Denver after reporting engine vibrations last evening. The plane landed safely, but while taxiing to the gate, an engine caught fire. Passengers were evacuated using the aircraft slides, including this woman.
I was on the phone trying to reroute and figure out what we're going to do to get it to our connecting flight. And the next thing I know, we have a very abrupt landing. And as soon as we land, everybody's standing up and screaming. I look out the window and there's flames because I was sitting right by the wing and I saw flames out the window.
The FAA says an investigation is underway. Russian President Vladimir Putin wants to discuss a proposed ceasefire in Ukraine with President Donald Trump, but warns that any truce should lead to a long-term resolution of the war. Trump is optimistic about the possibility of a ceasefire, but says it doesn't mean anything until the final outcome is known. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul.
Michael Barr, thanks so much. There's uncertainty out there, Paul. There's risk out there.
There is.
Like there's this weekend, the Tigers in spring training. This is the Grapefruit League, folks. For those of you international, they play back-to-back the Pittsburghs, the Philadelphias, the Baltimore Orioles. Michael Barr, Sunday, March 16, Oriole tickets, $21.
Yeah.
Is where they start.
Spring training.
A value.
Yes.
Risk and uncertainty. We're having fun with this today. It's one of our themes here. A shout out. Can we say a shout out to Gustav?
Yeah.
In Sweden?
Really?
He's 16 years old.
Good for him.
He needs a new life. He listens to us. I don't know what. Gustav, be careful. He says, what book should I read? Here's the book, folks. Peter Bernstein, Against the Gods. And it's about what everybody's yammering about, Paul, right now, but they don't know, which is measurable risk versus uncertainty. We don't have a clue. Like, we don't have a clue if Duke can take on UNC.
No.
That's not risk. That's
7 o'clock
uncertainty.
tonight. Yeah, Duke UNC for the third time this year without Cooper Flag. We'll see how it goes here. But the markets here, Tom, I'm looking, again, as we talk about it the last 3 or 4 days here at this time every morning, and futures, up about 0.7% on the S&P.
Yeah.
But this market is, as you said a couple of days ago, just waiting on the next piece of news to come out of, I guess, Washington, maybe Miami, or Palm Beach. And that could just topple the markets
I'm
again.
going to go to Shanali Bassick, but you'll have to do. Shanali doesn't get up, folks, till like 9 o'clock.
Yeah.
Or whatever. But I'm sorry, this uncertainty. I mean, Johns Hopkins laying off 2,000 people, I think is the headline today. Michael Barr will have that, folks. What does Wall Street do? I mean, what are the conversations this weekend among people that have to meet payrolls at banks?
Yeah, absolutely. I mean, I think a lot of the smart strategists we talked to, smart economists, is we just don't know. And if that,
just don't know.
That uncertainty is just, we've heard it a million times since forever, is just the markets don't like uncertainty. And boy, then we got a lot of that out there. So again, everybody's trying to get a sense of where we go from here.
And we'll talk to have some good conversations on that. Henrietta Trey's, Wendy Schiller scheduled to be with David Gura in Ottawa, I believe.
The G7
this morning. Is it? Oh, it's a G7?
Yeah, they sent him up there.
Oh, they're in Quebec?
Quebec. How's his French? I don't know.
C'est magnifique. From New York City, this is Bloomberg Surveillance. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene on a Friday. Great set of guests to get you going on a Friday, to slide into the weekend, to look ahead to next week and the Fed meeting, to look ahead into the end of the quarter.
Yep.
Can you wait for earnings? What's your guidance on an earnings call? April 29th.
I think we're going to hear the word uncertainty about 1,000 times a day on those, earnings calls.
We welcome all of you on your commute across the nation, particularly good morning in the corridor from Washington up to 92.9 FM in Boston. Bloomberg Surveillance Today brought to you by IBKR. Will U.S. natural gas production, will it exceed 3.27 billion cubic feet in January 2025? At IBKR Forecast Trader, the yes was recently a lofty 9%. Check the data, spot the trends, and start predicting today at ibkr.com/forecast. We thank IBKR for foundational work here this morning. Futures up 39, Dow futures up 192. The VIX, come on, it's supposed to be a 27 VIX. It's not.
Where are we here? We're 24 and change.
It's a better VIX.
We're okay.
It's a better VIX. Joining us right now, and this is a timely conversation because we're like, the stock market, we're all going to die, and maybe we look at gold. Mac Diczok joins us, head of fixed income strategy for Maryland for Bank of America Private Bank. What's the level of sweat among your clients? And don't give me the Brian Moynihan answer, blah, blah, blah. Okay, what's the level of panic out there on a Friday?
Not that bad. Not that bad at all.
That's what we're hearing.
Retail has been surprisingly resilient, looking to put capital to work. We are not seeing panic, especially with regard to the equity markets, from most of the two-legged individuals or clients. They're reacting very maturely to this market environment.
Brian listens every morning, so don't sweat. But is it just because they think things and systems will adjust the Trump message from the White House and will move forward?
I think they have a very good ability, and they have had over the past couple of years, to sort of look through the noise. And at the end of the day, there is some obviously economic uncertainty here. And I know outside of certain sectors, certain geographies, there are not a lot of massive layoffs, right? The corporate sector is still not laying people off. So even if there's a slight uptick in unemployment from the lows, until you actually start to let people go, until you're afraid of your own job, your brother-in-law loses his job, your wife loses her job, until that happens, people are still relatively sanguine. And again, we're not seeing any significant sentiment changes from retail with regard to the equity markets, which is impressive.
All right, well, how about in fixed income space here? I mean, you can sit there at a 2-year treasury and get darn near 4%. Do you do that? That's not a bad living. Or do you take some credit risk?
So we don't think you need to take a lot of credit risk, but we would like people to certainly be longer duration than a sort of 2 to 3 year on average. Right, the regular client should be around probably, I think, 5 to 6 years. It depends on the individual client. But at the end of the day, the bond market average duration is just over 6. We really don't want clients to be too short to whatever their strategic duration target is without a good reason. Again, a lot of clients are actually still, where you do have some concerns from retail clients, is actually the fixed income side. They get more worried about that. Having seen that bond bear market, the 18% drop 2020, 21, 2022 from the highs, that's concerned them. That's obviously a lot more likely from a yield of negative 2% real rates than it is at a roughly plus 2% real yields across the curve.
It's interesting. I mean, over the last couple of years, when I look at the Bloomberg fixed income total return screen, where I've seen the best returns has been with risk, high yield, leverage loans. Actually, and those two are actually underperforming this year. That's kind of a change, at least.
Definitely underperforming. Again, not surprising to see credit, both high yield and IG, underperform the index with equities. They have a higher correlation to equities. But again, for the retail client, depends on your time frame. Well, you might see some market value changing in your corporate bonds relative to treasuries, spread widening. If you're strategically long credit year in and year out, you're getting that extra yield over credit losses, you'll get a better portfolio performance. So right now we're actually just kind of pulling our horns in on our sector tilts, neutral across sectors in fixed income.
Are you throwing a brick at some, advisor at Bank of America who goes back to Rote 60-40 strategy? Is it like a dinosaur, or is it germane today?
No. We do not think it's a dinosaur at all. Maybe I'm the dinosaur, but we don't think it's a dinosaur at all.
Right.
We had a lot of concerns, obviously, that bonds were no longer doing their jobs. You needed something else to replace equity, to replace bonds as diversified equities. Commodities was given as a particularly good one. We were never buyers of that. At those valuations we had a couple of years back, again, negative real yields, it's probably hard for bonds to work. The way I've described it for a retail client is you're in a 400-meter race If you're 2% behind inflation, well, you're 50 meters behind the starting line versus commodities. Commodities are going to track inflation. If bonds are below inflation, you're not starting in a good place. You're not even 50 yards back. You're sitting in the stands. Now we've got bonds that are 2% on average, real, above inflation. So they're already beating inflation, and so they're ahead in the race. That's why they're diversifying. That's why they're diversified in August. That's why they're diversifying now. They have the valuations where they can come down with any uncertainty.
What's the biggest mistake high net worth retail makes in fixed income?
Historically,
yield hog? Is it just that simple?
It's been the opposite. It's been the opposite. Again, for the past several years, the issue has not been yield hoggy. It's been afraid of duration. So scarred by those double-digit losses in terms of high-quality fixed income. That's where they've been reluctant.
2022 was rough. I mean, historically rough in 2022.
It was very rough. Again, when you're at negative 2% real yields, there are not a lot of good things that can happen, right? But that negative 2 to 2% move, that 400 basis point move in real rates, our opinion, generally speaking, that was the bond bear market.
Yep. How about, I mean, mortgage-backed securities? I'm seeing some of the best returns in fixed income and mortgage-backed securities. What's going on in that market?
We like mortgage-backed securities, generally speaking. Again, we're neutral across sectors, but within sectors, we do like mortgage-backs because what's the risk in a mortgage-back? You're always going to get your principal and your interest payment back. You just don't know when. If people prepay, you get more cash. Usually when rates are lower, you don't want it. Rates go up, the bonds extend, you get less cash flow when you'd like to reinvest at higher yields. The bonds have already extended. Hopefully some of you have 2% mortgages on whatever properties you have. The bonds have extended already. Right. You're still getting the cash flow. So you're almost basically a flat yield on mortgage backs to investment grade corporates right now. That makes mortgage backs look relatively attractive, especially in a volatile equity environment.
With all the politics that's going on, folks, we're waiting for a conversation, our Anne-Marie Horden in conversation with a gentleman from the Netherlands, Mr. Rutte, now at NATO, the new leader of NATO. And we're looking forward to that here in about 4 minutes, we hope. We're lining up the antennae and the satellites and the Starlink. Matt Diczok with us with Bank of America. I look at this, and the number one thing has been the gift of cash. If you believe disinflation's in order, not the fear of deflation, but after the sticky inflation, there's a settlement of GDP, we get a disinflationary trend. Can you model cash back under 4%?
I believe you can. And if you maintain the idea that the Fed is focused on getting back to 2% inflation or very close to it, well then, no matter how aggressive fiscal policy is, it can't really change demographics. It's very tough to change the population dynamics. And so real rates, again, do they have to be 50 basis points above inflation? Probably not. In that range of 50 to 150, 1% on average, 1% over inflation, right? So then a 3% Fed funds rate, 2% inflation plus 1% real sounds like a reasonable place to be.
Really valuable on a Friday. Thank you so much. Matt Diczok with us. He'll be with us here again. Next time we'll talk rugby at University of Pennsylvania. Right now, one of my favorite people, Francine Lacroix introduced him to me many times, the former leader of his Netherlands, of Holland, and now with NATO, our Anne-Marie Horden in conversation with Mark Rutte.
So we worked very well together, and it was a very friendly lunch, and also an absolute clear commitment to the alliance, to NATO, to what the alliance stands for. So it was very optimistic and very positive.
So you took away that Trump is 100% committed to the alliance, even though individuals in his orbit, like Elon Musk, are calling for the U.S. to leave.
He was absolutely clear. There was no room for doubt there. And he did, by the way, state the same when he was meeting with Macron, the French president, and with Starmer, the British prime minister, 2 weeks before. So I tell some of my European colleagues when they say, well, is the US still connected and committed to NATO? I tell them you might want to turn on your television and listen to the president when he says this. Because he was on the record, and again yesterday, stating this. So I have no doubt, and there is no reason to doubt that.
Did you see Elon Musk yesterday? Were there any individuals at this table that you had to convince for the reasons why the U.S. should be a part of the alliance?
Well, Elon was not there, but in the conversation there was nobody there doubting the need for alliance. But, of course, everybody very much pushing for more spending, and particularly on the European side, because we are lacking behind, but luckily we are now ramping up, and we're spending much more on the European side of NATO. Look what is happening now in Germany. This is staggering, potentially a $500 billion euro/dollars extra on defense spending, that's historic.
So the Germans have reached this morning reporting out of Germany on this debt package. As you say, there's going to be a lot more money coming out of Germany for defense.
It looked positive, I think. They had to deal with the Greens, but it seems that they're getting there.
Yeah, it seems like they're getting there, and there will be an agreement in place. There is a debate, though, when it comes to Europe, or whether or not Trump is helpful because of things like this. The Germans are finally starting to spend on things like defense, not having to outsource it to the United States. Or is Trump unhelpful because he really is shaking up the global order, not just when it comes to militarily, but also things like tariffs. Yesterday, 200% on European wine, champagne, and cheeses. How do you view his impact on the continent?
I think when it comes to defense spending, he is extremely helpful. And I told him yesterday, Trump 45, again, his first term. We had pledged in 2014 to go to the famous 2%. Nothing happened. He came in 16, 17. And then immediately you see the defense spending coming up. Now the aggregate amount is about 700 billion, going into 1 trillion extra. That was Trump 45. Now the second Trump presidency, he is only in his 50th days now, I think, or 51st day. We have seen 800 billion from the Europeans. We have seen this half-term package from the Germans, but also the Brits, the Swedes, the Czechs, the Belgians, so many others ramping up. And this is because they sense that with Trump in the White House, this is necessary, but also, of course, because we all realize in Europe and here in the US that Russia and China pose a threat. And that we have to rearm ourselves because they are doing this at an incredible pace.
But on trade, he definitely is ratcheting up the tension when it comes to trade policy, tariffs with the European Union. Does that send the wrong message to NATO adversaries?
Well, I would leave that to the EU and the US, but when I look at from an alliance point of perspective, I would argue that Europeans are buying 4 times more when it comes to defense industrial products here in the US than the US is spending in Europe. And I don't mind that difference, so that it is a 4-to-1. So you guys are getting much more, a better deal here than the Europeans. And that will only become more, because if we keep the equation the same and spending more, you will have the overall amount being involved really getting up. And already it's a couple of 100 billions over the last couple of years. The F-35s, the Patriot systems, and all the other great products from the defense industrial base here in the US being bought by the Europeans. And that's good news.
I know you're preparing for the Hague summit this summer. Do you think you're going to increase defense spending to what the Trump administration is calling for, 5% of GDP for all NATO members?
Well, but what we are doing is we have a process in place where we exactly determine what are the gaps, and these gaps are big. So we have to do a lot more than we're doing now, so it will be considerably more than 2%. We first now, the next couple of weeks, will decide on exactly what the gaps are in terms of long-range missiles, in terms of our armies, which are depleted, in terms of our defense against ballistic missiles, our command and control systems, all that. That is the priority now, and then you will come to a new number. And that will be much more than 2%. I believe it will be more than 3%, but I cannot now totally envisage where it will end up. But when you look at the hundreds of billions pouring in now, basically it is already happening, and that's the good news.
Do you think that's an optimistic goal, or will that be a red line for this administration, say 5%?
I think what we need to do collectively is to make sure that we can defend ourselves. And at this moment, we cannot defend ourselves going forward. Yes, now, but not in 4 or 5 years, because the Russians, for example, ammunition are producing in 3 months what the whole of the alliance, including the US and up to and including Turkey, is producing in a year. So we have to ramp up defense industrial production, and we have to ramp up on the European side and the Canadian side the defense spending. And we will decide on that over the next couple of months. And it has to be content-based, but it will be much, much more. And again, when you look at the numbers coming in now, the Trump effect of this new Trump presidency is clearly there.
When it comes to defense of Europe, did you and the president talk about potentially amending where troops are, American troops, on the continent? Because there were reports that he was thinking maybe pulling out from Germany and putting more troops on the eastern flank, maybe to Hungary.
Well, we didn't go into that detail, but what we know, when Pete Hegseth, the Secretary of Defense, was visiting NATO, he was on the record saying, hey guys, you have to understand that as a United States, we also have to pivot towards the Indo-Pacific. So that means that we have to take care of more than one theater. Yes, the European theater, also the Middle East, also the Indo-Pacific. This, of course, history made you the leader as United States. That means that you have to attend these various issues. And that also will mean probably over time, the Europeans spending more, that you guys will have to look at, okay, where can we best deploy our troops? But that will be a gradual process, taking time and not abrupt.
There was definitely, with this administration coming in, more troops being put on the U.S. southern border. Under the Biden administration, though, there was a surge of about 20,000 troops to Europe. Is this administration going to pull back that Biden surge of 20,000 troops because they have other priorities, like the southern border, like the Red Sea in the Middle East, like the Asia Pacific?
Well, we didn't discuss those numbers in that detail. So,
but would that concern you?
No, but what I think is important is that the US is committed to NATO, committed to the whole of the alliance, and is also committed to, if over time the Europeans are doing much and much more, and for the US also to attend to other issues, like in the Pacific, and by the way, as an alliance, as a collective of 32 countries, we can also be helpful in the sense of projecting more American power at the world stage, because the US not being on its own, but embedded in an organization with 31 other allies, giving that whole...
Do you think that was missing in the past 4 years? American power on the world stage?
I think it was there, but I think we could have done much more. And when it comes to the European side of NATO, we were still lacking behind in terms of our defense spending. And again, I think...
there's a hot war in Europe right now, and that's what I want to talk to you about, what's going on in Russia and Ukraine. While you were in the Oval Office, Steve Witkoff, the president's longtime friend, his special advisor, second meeting he had with President Putin in Moscow. Coming out of that meeting, Dmitry Peskov is saying he's cautiously optimistic. When do you think we could see a 30-day ceasefire?
Well, I cannot predict that, but what I can say is that I'm
But
happy.
You're in more rooms than I am.
Yeah, I know, but let me say this. First of all, the Trump administration, the president himself, broke the deadlock on this war. Because he started to engage with the Russians. I think that's positive. With the Ukrainians, that's positive. And there was a deal last Tuesday in Saudi Arabia between the US and Ukraine on pushing for this ceasefire. So this is all good. Obviously, the US administration is now dialoguing with the Russians to see where they are on this. And that will be a step-by-step approach. But this is literally developing over the next couple of hours and days. So very hard to predict when it will happen. But I think this idea of having a 30-day ceasefire is a very wise plan because it gives you the room to go into more detail on what next.
You've heard from the Ukrainians. They want security guarantees. Did you get a sense from your meetings yesterday that the U.S. is willing to do that?
Well, the US is saying this. First, we need a peace deal / a ceasefire. And the president is very clear on this, that obviously there will be many issues to be discussed and debated when a ceasefire / a peace deal is there. But to discuss how to keep a peace deal, if there is not yet a peace deal, is also a bit strange. Of course, you have to think in parallel.
He's already taken off Ukraine joining NATO off the table. So Ukraine is left asking this question, how are we going to know we're going to have proper security?
Yeah, but he was also very clear, Pete Hegseth in Brussels, but also the president himself, that when there is a deal on Ukraine, it has to be lasting. It has to be durable. Putin should not have to try this again. So the question is then the how. How do you do this? Post a peace deal. Then I would side with the president. You first need to have a peace deal before you can get into these details. Obviously, behind the screens, there will be discussions on the what if there is a peace deal, how then to maintain that. But there are many ways to do that. And we know, of course, that the French...
Will NATO be involved? Zelensky's calling for a monitoring mechanism coming from the alliance itself.
I mean, there are many ways to do this, but I think for NATO to be as NATO involved will be difficult. But NATO will maybe always advise and look into what is the best way to do this. But in the end, what we are seeing now is the French and the Brits and the Brits and the Americans discussing how could you organize that. But again, I would caution a little bit that before you get in too much detail in terms of how to maintain the peace, you first need to have that deal. And it is a step-by-step approach, and one after the other. And there, I think, Trump is right.
Do you think we get a deal this year? Do you think the fighting stops this year?
I'm optimistic, yes. And I know
so Peskov is cautiously optimistic. I believe the National Security Advisor, Mike Waltz, is optimistic, and so are you.
I would also be cautiously optimistic about this year, but I hope it is sooner, because the amount of people dying there, the destruction of whole cities happening as we speak, it is really very, very painful, and it is having an impact on so many families and so many people in Ukraine, but also on the Russian side. We know that there were days that the Russians were losing up to 1,500 people dying or seriously wounded a day, but also on the Ukrainian side, so many people dead and so many people seriously wounded.
Before you were Secretary General of NATO, you ran a European country. Would you be willing to do business again with Russia after this? Because we are hearing reports of things like maybe gas deals come back into play.
Well, I mean, I'm not there because, first of all, you have to maintain the pressure on the Russians to make sure that they do whatever is necessary. That's why we have the sanctions, and let's not be naive about the Russians. But longer term, Russia is there. I mean, Russia will not go away. And I've had many dealings with President Putin till 2014. In my first 4 years as Prime Minister, we had many negotiations. And I think it is normal if the war would have stopped for Europe to somehow, step by step, and also for the US, step by step, to restore normal relations with the Russians. But we are absolutely not there yet. We have to maintain the pressure on them to make sure that they are willing to engage seriously in talks with the American administration and, of course, also with the Ukrainians.
I think the markets and business leaders might be a step ahead of the leaders in this one. We have to end on Greenland, because you were in the middle of this Oval Office meeting, and the president's talking about how he wants to go after Greenland. He wants the critical minerals there. Are you concerned at any point you'll be mediating between two NATO members?
No, I know that they are in close dialogue, Denmark and the US. So I will leave it at that discussion between the two of them. But there is a bigger issue at stake here, and that is the high north, the Arctic. And this includes the US through Alaska. It includes Canada. It includes Iceland, Norway, Sweden, Finland, and Denmark because of Greenland. And I think the president is totally right in saying, and others are arguing also, the Russians rearming there, the Chinese using these sea roads, knowing that we have a lack of icebreakers. There is a reason for these 7 countries, and NATO could be somehow involved here also in terms of advising and bringing the group together, that we have to take care of our defense in the high north. So this general issue he put on the agenda, I think that's positive.
And it's something NATO will talk about this summer, potentially.
Potentially, and I think the 7 countries are coordinating, and if there is a role for NATO, we will always be present.
And we hope to see you there at the summit. Thank you so much,
Thank you so much.
Rutte. Thank you so much for joining in. His first interview of the day after his Oval Office.
There with the new minted leader of NATO, Mark Rutte of the Netherlands, and I really can't say how it sounds out of a Patrick O'Brien novel from the 18th century or so.
Mm-hmm.
You know, we don't know it in America, but the Baltic Sea, as she ends there with this relationship of Greenland, where they had an important election in the last 2 or 3 days, it stunned people. The party that won very much wants to stay with Denmark.
Sure.
And so.
What a timing for the G7, Tom, to be now and to be in Canada. I mean, how just amazing.
How do we have a G7 at the presidential level? I mean, I don't really understand how that happens. And, you know, we have famous photos from before, and we'll just have to see. What we're going to do here, folks, we welcome all of you on a Friday. Thank you so much. The interest on YouTube, thank you so much. There's one guy here that was just vicious. Let me see. I mean, Wendy Schiller would never be this vicious. I don't think I can. The feed is so
busy. I mean, it's
busy that I don't think I can find the guy that went after me. I mean, it was just
didn't like the bow tie, didn't it?
You know, he liked the bow tie. This is sort of like pre-St. Patrick's Day.
I love it. Yeah, absolutely.
I was going to go green today, but I'm going to save that for next week. Joining us now, David Gurl will join us from Quebec City.
Nice.
My mistake, not Ottawa. We'll talk about that. But Wendy Schiller, now with Brown University. Wendy, you got a class today or Monday, whether it's undergraduates or graduates. Where do you begin on the simple swirl hour to hour of our headlines?
I mean, I think this is a moment in time for people to watch party politics, not budget politics per se. You know, what the Democrats have been sort of very quiet, we can argue. And now we see in town halls that Republicans, Independents, and Democrats are sort of saying, wait a minute, we didn't sign up for this. Slow it down. You know, we don't want to cut veterans' benefits, for example. So now the Democrats need a message. And this is an opportunity politically for them to make a point, make a stand, say we're gonna stop the bill that the House did. We're gonna shut the government down. Democrats do not like to shut the government down. That is not their MO. Democrats like government. They think it does good things.
Come on. I mean, Wendy, the known world fell over last night as the senator from New York caved in to President Trump. Let's start with basics. If there's a shutdown midnight, like right when they're doing qualies in Australia for the F1, Wendy, if they shut down, what actually happens?
Well, I mean, so they shut down over a weekend. It's a little bit less, you know, the essentials. If you're deemed an essential worker, like, you know, TSA workers, for example, air traffic controllers, then you have to come to work. You have to come to work and you don't get paid. And usually they give you back pay after the government shuts down. You're not paid for a while, but that's not a guarantee under the Trump administration. Problem is that the president designates who's essential. And the Democrats are worried that this will be an opportunity for Trump to take a lot of people, out of the running and deem them non-essential. And then if they're non-essential, then they don't come back to work, and maybe they never come back to work. But so the Democrats are facing they're worried that they'll decimate the federal government even more than they are now.
Oh, come on. I mean, we're in original territory. I get that. I'm not critical of Republicans. I'm not critical of Democrats. But if we shut down, and granted the executive office can do whatever they want, I guess, in that, isn't it repaired down the road by the judiciary or by the legislative branch if they choose and if they get majority power?
6 or 8 months ago, I would have said, yes, all those separation of powers mechanisms would work. I don't know that they will work now. Trump and the Trump administration is testing the limits of everything that we've lived under for a very long time. And we don't know. We just simply don't know if the federal courts just said that you have to send all the Veterans Administration people back to work. Will the Trump administration do that? And under a shutdown, they have the administrative authority legally to designate those workers as non-essential. Then they go away. So I think that is Schumer's decision. I thought it was terrible politics for Chuck Schumer to come out blazing, I'm not going to support it. And 36 hours, not even later, he says, no, I'm going to support it. I think that is weak leadership. I think that's going to make Democrats very unhappy. And if you don't start to rile your base up at some point, if the Democrat Party, then you will disappear. So I don't understand the political calculus here. I think it was ill-advised, but I understand the substantive calculus for the Democratic Party saying to themselves, it actually ends up ceding more power to Trump to shut the government down. It's a long explanation, but that's what they're thinking. So my guess is that they don't shut the government down. But unless they find some other way of making a stand, they're going to lose their own base that's going to look for some other alternative.
So are you surprised, Wendy, that we haven't seen another voice from the Democratic Party rise up? I mean, the only one I think we hear on the national stage is Senator Schumer. It just seems like, again, President Trump has all the oxygen in the room.
That is true. Although people are starting, like Mark Kelly of Arizona. Let's pay attention to Mark Kelly of Arizona. He says he's not going to vote for this bill. He comes from a Republican state at the moment that voted for Donald Trump. But he's weighing his options, figuring out, can he make a run to be the spokesperson? But you need power to be the spokesperson, right? You need power. And the Democrats don't have any power in Washington. I don't think anybody but Donald Trump seems to have power in Washington these days. But they don't have any power. So Gavin Newsom's got a podcast. I'm not sure where that's going to get him. But there simply is nothing they can do. So you want to be a voice, but unless you can do something like AOC, mobilize some sort of opposition somewhere, then people aren't going to listen to you.
But Wendy, seriously now, folks, I'm not trying to be snarky. We're going to go to David Gurry here in a moment. Professor Schiller, did Senator Schumer's career end last night?
I think he made himself far more vulnerable to a successful primary challenge within the Democrat Party last night, but he may also have decided, I'm not going to run again. Jeanne Shaheen of New Hampshire, who's at 78, she said she's not running again. She would have, I think, actually gotten reelected in New Hampshire 2 years from now. So people are leaving, and maybe it's time for a generational change in the Democratic Party. It doesn't mean that they'll be electorally successful under different leaders, but I think the Democratic base is crying out for leadership and opposition to this president, and they're not finding it anywhere. In other words, no one's coming to help the Democratic Party or even stop the Trump cuts.
Too short a visit. Wendy Schiller, thank you so much with Brown University. And for those of you up to speed here, last night a bombshell is a senator from New York took his party away. He said, we're going to support the Republicans to not have a shutdown. And there was a firestorm of debate. So what we're going to do right now, folks, is understand that this is where hockey sticks were born.
Really?
I mean, you had a Northland hockey stick or a Victoriaville or a CCM 5-stripe.
Yes,
and if you're in, and get out the map, folks. I mean, Montreal's there. We all know where Montreal is. Half of us know where Ottawa is from there. Good morning, Ottawa. And then you go up the river to Quebec City.
Quebec,
in that
Quebec
wonderful
City.
hotel, the Frontenac. And then you go even farther up the St. Lawrence Seaway. Nobody speaks English. The only English speaker there right now is David Gura, and he joins us from the G7 meetings. David, bring me back 3 dozen Victoriavilles. You know, I need Live 5. I need those when I come back. What is important at the G7 to get to Monday? How do they get to Monday at this important finance meeting?
We are speeding to the end of this summit, Tom, and I think that that's what's most important here is how it finishes up. And there isn't agreement yet on this communique, this kind of statement of principles among the diplomats who are participating in this. But we're looking at a summit that has really 2 sides to it. There's the official agenda, all of the focus on Ukraine and what happens there, all of the focus on what happens in the Middle East. And then there's this unofficial agenda. That has to do with trade and the fact that the geopolitical landscape has shifted so much over these last 6 or 7 weeks. And so those diplomats, with the exception of Secretary of State Marco Rubio, are trying to figure out what the path forward is here. So you ask about what the path forward is here for next week. It's how do they pick up the pieces or begin to and kind of find a way to trust their American counterpart and begin to work earnestly on some of these major policy issues, Tom?
So, David, is the feeling there, is the vibe there, the U.S. and everybody else?
It does feel that way. And just a couple of notes on the vibe. I talked to Kaja Kallas, who's the EU's chief diplomat, yesterday. We had a long interview, and she said, you know, when you're in the room, when you're talking to the Secretary of State, when you're talking to these other diplomats, it's actually fairly happy. He's saying all of the right things. They feel like they can agree. But, you know, this conversation that has been percolating over the last few weeks about the importance of Europe, the new importance of Europe, Europe emancipating itself from the United States, not having to rely on it as much, is certainly looming large. And there are just signs of that as you move about the rooms behind me. Kaja Kallas was wearing a red dress with a maple leaf on it in solidarity with her Canadian counterpart. So there's an acknowledgement that they're in a unique position here. They're having to work together, and there's a sense of sort of dislocation. What's happened here? How did the relationship between not the closest ally, an extremely close ally, how's it deteriorated so quickly, and sort of where do they move on from that, Paul?
I'm looking, David, here, in Mr. Carney, newly minted like today, is the leader of Canada, is going to drag the known world, including David Gura, ready for this, Paul, Kananaskis country near Calgary is where the G7 meeting is. David Gura, how does that happen given this maelstrom? Does President Trump show up at that meeting?
It's a great question, Tom. And of course, this is kind of determined not randomly, but in a cycle. You know, each G7 country gets to host this summit year after year after year. We should definitely mention where we are in the historical import of it. It was back in 2018 that the G7 Leaders Summit, that big event with all the world leaders that's going to happen out in Western Canada this summer, it took place here. And you'll remember that President Trump came here, met with his allies, and then in a fit of pique, took that communique, ripped it up, and left the summit early. So nobody here has forgotten that moment. And I think everyone is looking very cautiously upon what's going to happen this summer when it comes to that leaders meeting, because we know from past and from recent statements from President Trump, there is, if not a distaste, a lack of warmth when it comes to multilateral institutions like this one. And I said to Kaja Kallas yesterday, are you worried about the G7 and its integrity? She said she's an optimist. She's not. But it's certainly something I think that's front of mind for a lot of people here, Tom.
And now the surveillance Molson Golden Audible, we can do that with David. Gura, David, your thoughts last night on Senator Schumer dragging the Democrats towards the Republicans to avoid a shutdown. What does it do to the senator's career?
You know, I was surprised by it because I thought that after all of the hand-wringing about what Democrats were going to do and the dissatisfaction that we've seen about the Democratic response, he was going to stand firm on this, and he was giving every indication of doing that. I think there's going to be a lot of disappointment in the Democratic Party that has been looking to leaders like Senator Schumer for a stronger stance when it comes to how they're going to oppose President Trump. I understand why he did it. I sympathize greatly with what Professor Schiller was saying about the lack of interest here or desire to shut down the government. But I think that there are many members of the Democratic Party who are looking for a change of tack here. Senator Schumer isn't providing it. And so I'm very curious sort of what more they can do now going forward as President Trump's agenda, which, of course, has been waiting in the wings, now will come to the floor of this Congress, debated by committee, now stands a much realer chance of being taken seriously than it would have if this shutdown had taken place, Tom.
David, bring me back a dozen CCM 5-stripe. You know, the wooden ones. I want the ash ones, okay? I know they break quicker, but the ash ones. They cost they're like $9.92.
I know a guy. I know a guy, and we'll figure it out. We'll
Very
figure it
good.
out.
David Gura, thank you so much. He is at Charleroi. I hope I'm pronouncing that right.
That was good. I like that.
And folks, I can't say enough about my ignorance and Americans' ignorance of Quebec and Ontario over to north of Minnesota. We are ignorant. It is a glorious country, a glorious heritage. Futures up 50 here on a Friday. Thank you so much for staying with us on YouTube. Let's go up to Tom's Diner.
Sure.
Upper West Side. Suzanne Vega, Luca.
Oh.
Walked into the door again. If you ask, that's what I'll say. It's not your business anyway. I guess I'd like to be alone. Nothing broken, nothing wrong. Just don't ask me how I am. Just don't ask me how I am. Just don't ask me how I am.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo. Lisa Mateo on assignment today.
Ooh.
I think she's farther away than Gura is.
Is? Okay.
Gura's up at Charleroi.
Yeah.
How'd they do? I butchered
good.
that.
Right outside Quebec City.
Well, outside like 50 miles up the river.
I know.
The black fly is the national bird up there. Anyways, David Gura, thank you so much for that at the G7 meeting. Anne-Marie Horton with that important conversation with Mr. Ruda of NATO as well. Bloomberg Surveillance this morning. We're brought to you by IBKR with the U.S. Consumer Sentiment Index. Will it exceed 70.3 this March of 2025? And IBKR forecasts traded the yes recently at 29%, 29%. Check the data, spot the trends. Start predicting today at ibkr.com/forecast. On the data screen, Paul, what do you see?
See, I see some futures here, Tom, that are trading higher. We've seen this story before, but we got the S&P up about 50 points. That's 0.9%. NASDAQ up about 1.2% here. So we're futures stronger. They want to make a bounce here, but sometimes the news just overwhelms the market here.
Have you picked out lunch yet for Friday? No. After the show, what are you lunching?
Right on the train back to the Jersey Shore.
You're going right
maybe.
back to the shore.
Yep. As fast as
I'm looking at Piccola Cucina here on the Upper East Side.
Oh,
I think
nice.
I need like an Italian thing
Okay.
to, get me going today. Futures 49, folks. Yields are higher. Dollar was stronger. It's now flat. I guess that's important. Should we quote the Mexican peso? Almost at 19.
Yep.
20.03. Good morning in Mexico City. Thrilled of your listening to us. Great to get that note this week. Good morning in Mexico City. And we're going to do a lot more in the coming weeks here on, again, the challenges to Mexico. We're sending Gura to Mexico.
Yes, we'll send him
We'll
down
send
to
Gura.
Mexico.
You go down to Cancun or,
Yep.
into Mexico City. We'll see. Futures up 49. This is a joy, as we had Sam Stovall earlier. Now we're really going to dive into the adjustments of someone who's gotten the market so right. John Stoltzfus, in correction, half correction, partial correction, has said, be comfortable, own equities. He's chief investment strategist at Oppenheimer this morning. Are you still a bull?
Yes, I am, Tom. Still a bull.
Why?
Very much because when we look at the way business is navigating these waters, the earnings season that just ended, Q4 earnings season, you've got double-digit gains in 7 out of 9 sectors, only 2 sectors negative. One was double-digit earnings negative. That was energy, which figures because we're awash in oil right now. But the 7 sectors that were double-digit gains, it wasn't just tech and communication services. It was, you had good, strong value stocks in there. and values outperforming growth right now. And we think it's, the market is dynamic.
Okay, well, let's be dynamic. Let's pretend we're on a couch 40 years ago. I'll do my Lou Rukeyser imitation, and you do your John Stoltzfus imitation. It's 8:30 at night. The world's turned upside down, and Uncle Lou's there having us calm down. How will corporations adapt to this maelstrom? What does securities research at Oppenheimer say?
Well, I think what is generally the thought here is that corporations have been under duress now for over 16 years at many points. We had the great financial crisis.
NVIDIA's been under duress?
Well, no,
come on, you're killing
not
me.
recently, but if you look at it over the last few years, I mean, it had tough times, and some of the other techs did. But when you look at the markets and managements, how they've operated across the sectors, it's great financial crisis, the pandemic, the disruption of the global supply chain, the levels of inflation that were hit, the Fed policy tightening, no recession, the consumer is still spending. It's the resilience, Tom. That's what gives us the courage of our convictions at this point.
Some are concerned about the consumer there, John. We had some of the airlines earlier this week take their earnings down. We had some retailers like Kohl's take their guidance down here, maybe suggesting that all this uncertainty out there in the marketplace, the news, the noise, may be impacting the consumer. How do you think about that?
Well, Paul, without a doubt, we had the Fed raise 11 times and then on pause at 9 at the higher end, and just started to cut last September, just 50 bips September, a pair of 25 bips in November and December. So very much it's no doubt you're going to feel the slowing because people are feeling a pinch. But American consumers tend to move towards discount stores, private labels. We tend to keep shopping. The world criticizes for our love of consuming.
But what if, whatever the percentage is, 40, 50, 32%, the fancy people in America are keeping American consumption going?
Yes.
Does Oppenheimer think that is dented and that will push into a diminished revenue growth?
No, not at this point. We're still looking.
Can we get him to say something negative? Eric, come on. I need some negativity from Stoltzfus.
Well, to me, it looks like guitar prices are up.
Actually, on Reverb, hold on. Let's stop the show, folks, right now. We go to Paul Sweeney, disciplinarian.
Sure.
Should we have a joint guitar purchase this weekend where Stoltzfus and I both purchase separate Gretches?
I think you jump right in there.
There we go. Okay. Continue with John Stoltzfus, please, Paul.
There's a challenge. Boy, oh boy, now there's a challenge. But we have seen, and what happens if the tariffs affect Sitka spruce, coming in from Canada? There's all kinds of issues there that the one thinks of. But the realistic thing is we think that we're moving towards a new globalization. We think probably a point where with all this pressure that's being put on by the tariffs, the fact that we are the consumer of the world in size, the rest of the world has overcapacity because over the last 40 years they've been building capacity. We think we'll come out of this okay. I think that, Schumer, for all I've heard, there's plenty of criticism today. I think he recognizes the fact that we need to move together to try to avoid a shutdown and come to some kind of negotiation. We're looking for cooler heads to prevail. And, in this case, I think Schumer showed a cooler head.
I mean, Paul, the sophistication of YouTube live chat is killing me. Tanner, good morning. Epiphones for everyone.
Oh,
yeah, there you go.
Here.
Hey, John, I know at one point you had an S&P target of around 7,100. I think the highest on the street at one point.
You sure know how to hurt a guy,
So what are we doing here with this call?
Oh, that's a great one, Paul. What we're going to do with that is it's under review at this time, but we've got to figure it's very early in the year.
Yep.
Has been a very the dark pitch book. The negative thought really has been overly projected, likely. So let's take a look. We'll probably look at it and see how we go when we get into the second quarter.
John Stoltzfus with us with OPCO. We're thrilled he's with us. We're going to continue with Mr. Stoltzfus, a lengthy conversation this morning. Good morning on your commute. I know it's a Friday. People are starting to look at March Madness and that Sweeney's totally unfocused. What's his name sprained his ankle?
Cooper Flag.
Cooper Flag sprained his ankle. Sweeney had to be medicated with a double Tang mimosa this morning just to get to the show. There's lots of distractions. With John Stoltzfus, there's no distraction. John, I'm going to cut to the chase. And we're going to do this is for Global Wall Street right now. So you got a fan distribution, and a bull like you extends your x-axis. We've come down. You're going to get back to S&P 7100. I get it. You extend your x-axis out. Everybody in the game understands this. David Kostin and Goldman Sachs did a fan distribution of outcomes where they got down to a low single-digit probability, a center tendency out there. You pushed against that. Do you still push against a single-digit equity world?
I do. I still push against it, and I think that the reason why is where we are today is we are at a watershed period of innovation that can drive all sectors here. And it's not just about tech. It's about what tech can do for the Utes. It's what it can do for healthcare. It's what it can do for repurposing buildings and real estate. For finding resources in consumer staples, designing products for consumer discretionary. This is a very, it's what is it? The Chinese curse is, may you live in interesting times. But the other side of it, for the optimists, interesting times can produce not just risks, but can also produce opportunities. And when we look in hindsight, because as you know, I've been in this business for over 40 years. It's going to be 42 sometime between May and July.
Oh, you're a new kid.
God bless me. Anyway, the thing is, I've been through every boom, bust, and recovery cycle. And generally, when we look back, hindsight in perfection says, gosh, if only we bought more, if only we backed up the truck when people get so negative.
Crash of 87, which was, we don't need to go into it now, folks. There's too much valuable time here with John Stoltzfus. Crash of 87, I walked in the door and she handed me a triple martini.
There you go.
She took it off of a normal martini glass and put it in a rocks glass.
Yeah, October 19th, we walked out of the New York Stock Exchange. I went to the Pig and Poke or something. We had a couple of beers. That's what we did that day.
And guess what? Life went on.
Life went on, exactly.
3 months later, where were we?
Exactly, right back at all-time
My
highs.
aunt had turned 80 that year in August, and I learned a lot about investing from her. Her first phone call to me was, the first words were, Johnny, what should we be buying today?
Yep.
So that's where I come
Folks, bronze it. What you just heard there, what was her name?
Mary Stoltzfus.
Aunt Mary?
Aunt Mary.
Okay.
She was terrific.
In the canon of Bloomberg surveillance, bronze it to the memory of Aunt Mary. What did she say?
She said, Johnny, what should we be buying today? That was her exact words.
Paul, save us
well,
here.
I'll go to Aunt Mary again. What should we be buying here if you feel like the world's not coming to an end here?
Great question. Well, as you know, Oppenheimer doesn't let me talk individual stocks because I manage money for the firm.
It's Friday.
But I can give you the sectors, the worst performing sectors. The worst performing, I want to own consumer discretionary, infotech, communication services, financials, industrials. Those look good to me.
Yep.
You know, they're at the bottom of performance from the peak. Coming down there. And, you know, when it comes to healthcare, the Utes, real estate, and staples, I think they've had the run now. They've had I think it's a little late to get defensive.
Right. I mean, a lot of folks are feeling like this pullback in the market is kind of a self-inflicted problem here with all the talks about tariffs and what that means for potentially growth and inflation. But that talk and that environment, I don't see that changing anytime soon.
Well, you know, I think it incrementally it can begin to change. I think the first thing is hopefully, fingers crossed, today we don't see a government shutdown when they take that vote. That gets taken off the table. Then beyond that, you've got to figure that, you know, it was Bloomberg Intelligence that I think about a month ago said that if 25% tariffs were put in against Mexico and Canada, both of those countries would go into recession pretty quickly. And the thing is, the pressure of the constituencies here, whether it's from business or the consumers in all countries around the world, to different effects with these tariffs, will likely, we think, once again, bring cooler heads to the table, some kind of a deal to come out of it. And it's just that it's time for it. You know, it's not at this moment, but it looks like there's too much at stake to let things go to hell.
Right. Valuation. Did this pullback here, has it made valuation attractive or maybe just less egregious for some people?
Well, I think for those who were thinking it was egregious, it's less egregious. And for those who thought that it was primarily because demand for stocks had gone up so broadly and people, you know, it's no longer cocktail party stocks that that the private investor is doing. They're looking to replace what used to come from Social Security and corporate pension plans. Yep. And with a 401k, you just get X amount in terms of that a contribution that goes into the thing. So people have to invest like institutions, and that gives a lot of support to the market.
Question that we asked Sam Stovall a couple times this week, John, it's just simple. If with things beaten down, do you buy things that have gone down less, or do you buy things that have been beaten up?
I think it depends upon the quality more than anything else. So if it's something that has been really battered, happens to be good quality, good management, good prospects for the bounce. Otherwise, one thing you want to really emphasize quality here. It's so overused these days, but we do believe that quality of leadership in a corporation and ideas, and you can find those across market capitalizations, whether it's large, mid, or small, with the large likely favored by the largest investor community.
I got to get this in. We got a huge response on YouTube to this. Thank you so much. I mean, come on. The Epiphone for $3,500 with a P90 pickups. Explain to Joe Pass the great jazz guitarist, folks, Joe Pass. Explain what P90s do, because all these kids out there, they're like Seymour Duncan, rocker. What do P90s do that give you that sound?
The P90 is a single coil type pickup instead of a dual coil, so it'll be more prone to buzzing and hum. But that said, it has a really good fat tone when you roll down the treble. There's a roundness and a very rich sound that you get. But I prefer a PAF type pickup, you know, whether it was built by DiMarzio or Seymour Duncan. I'm kind of.
But like if you for 35 years ago, if you were in a Detroit dive jazz blues bar. And they'd be playing an Epiphone with PAFs or P90s, right?
That's right.
You know, and after the fourth bucket of Schlitz, I mean, you really help me here, Michael Barr.
Baker's Keyboard Lounge. That's where I am.
John Stoltzfus, thank you so much. Thank you out on YouTube for the comments. And did he say 7,100? Still on?
Still, yeah.
Yeah, we're hanging on to it, Tom. And we will put it under review depending how long this goes on for. But at this point, it's early in the year.
Incoming email, Mrs. Keene, Epiphone, $3,500. Not a chance. Thank you for that email. With our news in New York City, Michael Barnes.
Tom Paul, thank you very much. Senate Minority Leader Chuck Schumer says he plans to vote for a House Republican funding bill to avert a federal government shutdown today. Schumer says there appears to be enough Democrats on board to pass the CR measure.
I have said many times there are no winners in a government shutdown, but there are certainly victims, the most vulnerable Americans who rely on federal programs to feed their families, to access medical care, and to stay financially afloat.
However, Oregon Senator Jeff Merkley says he cannot support the House bill.
Realize the stakes here. You don't stop a bully by handing over your lunch money, and you don't stop a tyrant by handing them power.
Hamas says it received a proposal from mediators to resume ceasefire negotiations, and the militant group agreed to release an Israeli soldier who holds a U.S. citizenship. They will, in addition, hand over 4 bodies of dual national hostages. There were tense exchanges when Republican Congressman Chuck Edwards returned to his North Carolina district for a town hall with constituents. Many present say they are not happy with Republicans and President Trump with how they are running the country.
We've got a lot to be proud of in this country. I happen to agree with a lot of the things that's going on in Washington, D.C. right now. I know many of you are not. Yeah.
Congressman Edwards faced questions from people including possible cuts to Social Security, federal layoffs, and Elon Musk's Department of Government Efficiency. Big layoffs at Johns Hopkins. The university will cut more than 2,000 jobs. The university announced the cuts after the loss of $800 million in federal government grants from USAID. In Denver last night, almost 180 people on an American Airlines plane were forced to evacuate when one of the plane's engines caught fire. Officials say a dozen people suffered minor injuries. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom Poe.
Michael Barr, thanks so much. I want to mention this because it was a huge commitment. And of course, I'm going to be blunt. Mr. Bloomberg, his commitment to his Johns Hopkins University is noted with that. But we really leaned on Johns Hopkins during COVID. And you can go, yeah, so what? Let me tell you, these people were a little distracted. And any number of people I could mention came out and day after day after day tried to brief us on this. The leadership of that is at the Johns Hopkins Coronavirus Resource Center. They stopped, here's the triumph, Paul. They stopped collecting data 2 years ago, March 10, 2023. But I'm sitting here wondering, I don't have any news on this. I don't think Michael Barr does. You wonder, are those people involved in the 2,000 people?
Yeah, I don't know. I don't know. So we're seeing it across academia and across the country. So again, I'm not sure what that means. I've seen some reporting on, concerns about just medical research and just research in general, perhaps being at risk. I don't know.
Bloomberg yesterday with a story I mentioned on air yesterday, summing up the 1,000 here, 2,000 there, 50 there.
Yep.
Justin Wolfers has done some great job on this as well. And it's well over 200,000.
Yeah.
I mean, how do you put that in claims in 1 or 2 or 4 weeks? I mean, my mystery, folks, into the weekend, Paul, I know your mystery is Connor's ankle, but my mystery is, what is the unemployment rate forward? I don't have a clue.
No, I don't either. And, a lot of folks have said, hey, beware of this, maybe moving up to the mid-4s to the high 4s, and that's maybe where you really get people's attention and the Fed's attention.
When I'm watching on that as we get through the month, here's the U6, which is, thank you, David Rosenberg, for mentioning this. I call it the Greenspan unemployment rate, which is a higher level. It's not the one that's published and everybody goes into a frenzy at 8:30. But there's another unemployment rate, which is a richer set of data of people struggling out there. And that just ticked up. And to see, where that goes in the coming months will be important. Sweeney drives the market higher, up 40. Maybe it was a talk of guitars.
Yeah, up
Futures
55.
up 55. The VIX under 24, 23.85. On YouTube, subscribe to Bloomberg Podcasts.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene on a Friday. Terrific set of lists. One of the acclaimed Douglas Irwin coming up of Dartmouth. Must listen, I should say, for all of you worldwide. This morning, Bloomberg Surveillance. We're brought to you by Oracle. Attention growing businesses. Oracle, they are offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. That's Oracle Cloud Infrastructure, dated March 31st, contact them, oracle.com/Bloomberg. We thank Oracle for their commitment to our technology and to what we do here each and every day. Futures lift up 57 right now. We're going to squeeze a 2-hour discussion in here with America's giant on trade. Douglas Irwin is professor at Dartmouth. He's absolutely definitive. We mentioned Adam Posen yesterday and Chad Bone of the Peterson Institute. It's real simple, folks. The must-read this weekend, The Incoherent Case for Tariffs. Doug Irwin, in what way is the White House incoherent?
Well, in several ways, unfortunately. First is just trying to justify what it is they're trying to do. What is the mission? What is the goal? What is the end game that they want to accomplish? Is it revenue? Is it bringing back manufacturing jobs? Is it reducing the trade deficit? Is it national security? It's all the above. And the problem is we just draw on an insight by Jan Tinbergen, an old Dutch economist who won the Nobel Prize many years ago. We're just saying if you have a policy target that you want to hit, you need an instrument that will do that. And the problem is tariffs can't achieve multiple objectives in this way without a lot of collateral damage. And so it's not clear what the administration wants to achieve first and foremost.
The Bible on this, folks, this is when Blanche Flower was younger, Slaughter was younger, Doug Irwin was like out of graduate school. Against the Tide in Intellectual History of Free Trade. Here's my book review. Shut up and read it. Doug Irwin, this morning I go to John Stuart Mill, 19th century early, and he's arguing about infant industries. It is if President Trump wants to bring infant manufacturing back to America. Can he do that? Is there is there a policy success template to work off to bring infant manufacturing industry back to America?
Well, it's interesting you bring up John Stuart Mill because we're talking about the 19th century. And of course, he refers to William McKinley quite a bit, another 19th century president who imposed tariffs to try to keep industries here in the United States. You know, you can do it sometimes, but the cost can be very high. You know, many countries around the world try to reshore industries. So Argentina has a little bastion of manufacturing in Tierra del Fuego, of all places, that they've inculcated with tax subsidies and import tariffs. So you can reshore some industries, but the question is, at what price, at what cost to other sectors of the economy, and is it really worth it?
So, Professor, depending upon the day, the administration has different reasons for imposing tariffs, whether it's to, choke off drugs coming into the country or immigration, or some days it's trade deficits. I'm just not sure. But for trade deficits, let's just stick to the economics. If the U.S. runs a trade deficit with a particular country, is that inherently a problem? And if it is, do tariffs address that?
Well, generally, I mean, we can have a debate about whether reducing the trade deficit overall, not a particular bilateral balance, but the trade deficit overall is a good policy or not, or whether we should make that an objective. But let's say it is. Then the question, as you raise, is, are tariffs a way of achieving that? And generally not, because when you impose tariffs, the dollar is going to appreciate and imports may go down, but exports are going to be hit as well because of the appreciation of the dollar. In addition, there's foreign retaliation. So yes, import tariffs will reduce imports, but then foreign tariff retaliation is going to reduce U.S. exports. So what we try to point out is that, yes, there are policies that we can do as Americans to reduce the trade deficit. First and foremost, cut the fiscal deficit, because that is a big source of dis-saving in the U.S. It's a big source of excess spending. And you might recall Marty Feldstein, way back in the 1980s, had the twin deficit hypothesis that the current account deficit is being driven in part by the fiscal deficit. And so that's one concrete thing we could do to end our reliance on foreign capital inflows and help balance our books on both sides in terms of the trade accounts and the fiscal accounts.
Do tariffs raise revenue for the U.S. government? Is that an efficient way to do that?
Well, it can, yes. So we get about 2% of the federal government's revenue today is raised through the tariff. But the idea that you could balance the budget or pay for tax cuts with a big increase in tariffs is really not going to work. And one of the problems is that imports are very sensitive to tariffs. So as you raise tariffs, the volume of imports is going to shrink. It's a tax base that's going to shrink and disappear the more you tax it. So that revenue is going to disappear. once again, there's no alternative really to income and corporate taxes as a revenue-raising device for the U.S.
Our discussion of the markets is Friday morning. We'll continue with that. We do with futures elevated up 59, Dow futures up 273, NASDAQ on a roll. It's all green on the screen. We do that for Dartmouth, up 1.4%, and we are honored that Douglas Irwin is with us. I'll put out on social his Foreign Affairs article. I'm not going to mince words, folks. A subscription to the print Foreign Affairs magazine is literally the price of a fancy martini in Manhattan.
Okay.
And it is the Bible. You throw to your kids and say, shut up and read Douglas Irwin, shut up and read Adam and Posen, and on we go. There's a lot of people out there, Professor Irwin, that think fancy Ivy League professors are talking about a rigged system. And one way to start it is all the American corporations boosting up real estate in Dublin, so even Bono can't afford to live in Dublin anymore. Doug Irwin, comment on the free lunch of tax avoidance in Ireland by American corporations.
This is a really big issue, and you put your finger on something. When we try to use tariffs to adjust these things, we're sort of missing the boat. I'd recommend to you Kimberly Klausing of UCLA Law School, also affiliated with the Peterson Institute, who has pointed out, as many others have as well, that the tax code sort of pushes American manufacturers overseas. And so we have to resolve our tax system, our tax code problems, to bring back that economic activity and stop the offshoring of intellectual property, receipts, corporate income, and things of that sort. So just putting on tariffs isn't going to solve that problem, but the U.S. tax code can.
Please comment, and then the leadership on this, folks, came from William Klein, who was hugely influential for me. Doug Irwin, the president loves to talk about a bilateral approach, or even some would say a unilateral approach. William Klein would say we live in a multilateral world. Is the dreams and hopes of 1600 Pennsylvania Avenue going to discombobulate because we refuse to look at this multilaterally?
I think it's a shortcoming of their approach. And first of all, I mean, it has to start with sort of foreign policy and recognizing that we have allies and people that are democratic, market-oriented economies, and we're all sort of trying to achieve the same thing. They're not our enemies. There's a wonderful YouTube video of Ronald Reagan giving one of his Saturday radio addresses, which is almost speaking to Trump from the grave. It's talking about how our allies are and our trading partners are our friends, not our enemies. And we really have to work with them if we're going to confront the China threat and other threats around the world. So you can't alienate everyone and think that everyone's sort of taking advantage of you. There are countries with goodwill that we could work with cooperatively and improve the trade situation.
Right. Professor, thank you so much. And folks, I'm not going to mince words. Just buy Against the Tide. Just put it on a coffee table. You don't have to read it. Just put it there. It's cool. It's got a beautiful light blue cover and all that. Doug Irwin, thank you so much. At Dartmouth this morning. Paul, I think you're rocking Avondale. This is Sotheby's with a listing.
Okay.
Avoca Avenue, BlackRock, Dublin. It's not named after the company. BlackRock, Dublin, Ireland. 5 bedrooms, 5 bathrooms. 6,000 square feet.
Nice.
You're popping $6.4 million for that puppy.
Okay.
It's like, I talked to Vonnie Quinn about this. I talked to Manis the other day about it. It's literally the most expensive real estate out there.
I mean, Ireland's just in great shape. I mean,
it's a corporate money company.
It is.
It's got to be, right?
It started in the 80s.
Apple money and pharmaceutical money. And
Yep. We did those. They were called Dublin Docks tax advantage deals. That's what we did in the 80s at Payne Weber. That was the beginning.
Did you road trip over there?
Oh, all the time. 6 months lived in Dublin.
How many times have you been to the Guinness Brewery?
Oh,
be honest. Don't lie.
They know me there.
They know you.
The last
Mr.
trip,
Sweeney,
the last trip I
it?
didn't even go. That's
but the
how often
last
I've been
trip, you really did the tour. You went to
the
Western Ireland,
and we went
right?
to Northern Ireland too, at Belfast and Derry. So the places that I never got to.
What was your
before.
one distinction, your insight of Western Ireland?
Well, Western Ireland, the weather is intense because you come up the eastern side of Ireland, it's calm. You're on the Irish Sea, it's beautiful. You get up north, and then you turn, and then the westerly winds come in off the Atlantic Ocean, and those are hardy people there. That's the difference in the weather.
Sort of like the people on the shore of New Jersey. Paul Sweeney and Tom Keene on a Friday. Michael Barr and Lisa Mateo, we thank you for your attention here. Much more to come, and particularly on those markets with futures lifting up 57. On YouTube, subscribe to Bloomberg Podcasts, growing each and every day.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. Lisa Mateo. Do we know where Lisa is?
No, she's lounging somewhere.
Do we know where Michael Barr is?
We have no idea.
Either.
Tucker as well, no idea.
Tucker, we have no idea where he is. Is anybody in the control room? Oh, good. Our global technical director's here, at least. Thank you, Ken, for that. Our economic indicators always, even on a Friday where there's not much economics, although Michigan later,
we're going to have it. Alex Steele and I will have it.
Always brought to you from the support of Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. You know, I look at Citigroup economics, and what Willem Bouder did in some chaos, and he rebuilt it with Catherine Mann. And Professor Mann, who's now at the Bank of England, emailed me in today, and he says, Tom, lose the economics. Talk to Veronica about the basketball game. Mm-hmm. So Duke has 2 injuries.
Yes.
All of a sudden, and I'm going to kill this. Knuppel? Knippel.
Yes. One of the great names in college sports.
Tell Veronica Clark how Knippel is going to beat her UNCs tonight.
He's a lottery pick. That's how good he is. But
what
without
does that
Cooper,
mean?
He's going to be a top draft pick in the NBA.
Oh, okay.
Yeah, so he's going to be good. And we beat up on UNC all year, so we'll do it again. But Duke's only a 7.5 point favorite here, so a big come down in the line with all the injuries. So it could be a game.
Yeah, I figure, does Jane Fraser know that Veronica put this on the card and she's like sitting close?
Exactly. Veronica Clark joins us. She's a U.S. economist at Citigroup and a proud graduate of the University of North Carolina at Chapel Hill. Hey, Veronica, talk to us about inflation. What did we learn this week about inflation in the United States?
Yeah, we did get some interesting data. Of course, a month ago for that January data, we saw CPI come in pretty high, but our translation to PCE inflation was much softer. But this February data was kind of the opposite. We had, a softer CPI reading, softer PPI, but the details actually add up to a bit stronger core PCE inflation, which of course is what the Fed is targeting. So they might be a bit uncomfortable with that. We're tracking at 0.32% month-on-month core PCE. So that is stronger than what we saw in January.
If you mark down, or let's get ahead of it, as you publish to Monday, can we look ahead and say Citigroup will mark down your real GDP guesstimates?
I don't think so. We're still tracking, benign growth for the first quarter, not quite as negative as that Atlanta Fed GDP now is tracking right now, of course, but something close to flat. And we think we'll see that in Q2 and Q3 also. This does look like an economy that was slowing even before we get into, new downside risks from tariffs or uncertainty, DOGE cuts, lack of hiring. I think we'll see that weigh on the data as we're getting into the middle of the year.
Veronica, earlier this week, we had some earnings warnings from the airlines. They say weaker demand going forward. We also had some retailers post some weaker guidance. I'm thinking, like a broad-based department store like Kohl's took down their guidance pretty significantly. Does that call into question the health of the consumer for you?
Yeah, in a way. I mean, there are a lot of risks to the consumer. Maybe we're starting to see that slowing in spending. Of course, we saw January consumption data that was pretty weak. I think we will see a rebound in retail sales next week. Maybe there was weather, seasonal adjustment issues in that January data. But savings rates are very low, delinquencies are high, and if consumers are starting to feel worried about the labor market, maybe they cut back on spending more. I do think we'll see consumption slowing as we get to the middle of the year.
So again, that with maybe some of the uncertainty we're hearing from the tariffs about potentially not just raising inflation, but slowing economic growth. Is that how material is that for you guys at Citi?
Yeah, I mean, it is absolutely a downside risk. And I think that's what the bond market has kind of realized too. You know, we've had some stronger inflation data, but when we get tariff headlines now, it's not that yields move higher, it's that they move lower. And I do think tariffs are a bigger downside risk than they are, to growth, than they might be upside risk to inflation.
Do you assume with a dampened growth, even tenths of a %, that at some point that dampens inflation?
Yeah, I mean, I think, in the details of the inflation data, we did see something like airfares, that was very weak, and we hear that guidance from, airlines. You might see, upside risk to goods prices from tariffs, but you might see downside risk in certain services.
Exactly.
Yeah, absolutely. So there might not be the substantial kind of inflation impact that maybe people are thinking there would be from tariffs.
And now, folks, on a Friday, with all of us distracted, including Sweeney, who's placing a bet now on Duke, Veronica Clark, as simple as I can, the Fed meeting coming up here on the 19th, my head is spinning. What is this, a meeting where we get new dots?
We do. We get the new summary of economic projections, that's forecasts and the dot plot. It is a really tricky position for the Fed here because we have had some stronger inflation data. We know that that's a risk from tariffs getting into the spring. But if they don't acknowledge the growth risk, then they look somewhat out of touch, and they do risk an even further equity sell-off, tightening of financial conditions. So it's a really fine balancing act here.
Quickly here, do you have any clue where you would put the dot out 6 months, 1 year, 2 years, 3 years?
Yeah, so in December, we saw them essentially mark to market pricing, where they put their dots, for just 2 cuts for 2025.
Right.
We think that now goes to 3. That is what the market is pricing. The risk is if it stays at 2 and you look a bit out of touch on the growth risks.
Okay, nice brief. Veronica Clark, who's going to win tonight?
I don't follow closely enough. I don't always root against Duke.
She was in the library.
There it is. She'll always root against Duke. Nothing else has to be said. Veronica Clark, thank you so much. David Gura emailing in from Charlevoix, Quebec, agrees with Veronica. I still don't know how to pronounce it. I'll have to get French lessons with Michael Barr. With our news in New York City, Monsieur Barr.
Oh, you're in trouble. Thank you very much, Tom Paul. The Senate has worked to avert a partial government shutdown ahead of a midnight deadline. The shutdown appears to be averted for now after Senate Minority Leader Chuck Schumer reversed course and said he will vote for the CR. It appears there are enough Democrats to pass it. Bloomberg government's congressional reporter Maeve Sheehy.
It appears that the fight is over, at least for now. We'll obviously be doing all of this again in September when the funding runs out. But there is some tension between the House and the Senate right now because a lot of vulnerable House Democrats did block this CR on the floor. And now we're seeing kind of Schumer drop his threat to block the CR. So there's a little bit of tension going on within the party right now.
Bloomberg's Maeve Sheehy. President Trump met with NATO's Secretary General Mark Rutte at the White House. Among other things, the two discussed the Ukraine-U.S. ceasefire agreement and whether Russia is on board. This morning, Rutte, speaking with Bloomberg's Anne-Marie Hordern, also says allies need to spend considerably more than 2%.
We have seen 800 billion from the Europeans. We have seen this half-term package from the Germans, but also the Brits, the Swedes, the Czechs, the Belgians, so many others are ramping up. And this is because they sense that with Trump in the White House, this is necessary, but also, of course, because we all realize in Europe and here in the US that Russia and China pose a threat and that we have to rearm ourselves because they are doing this at an incredible pace.
NATO's Secretary General Mark Rutte speaking with Bloomberg's Anne-Marie Hornern. Hamas says it has accepted a proposal from mediators to release one living American-Israeli hostage and the bodies of 4 dual national hostages who had died in captivity. The militant group did not immediately specify when the release of soldier Aiden Alexander and the 4 bodies would occur. Today's statement comes as talks continue in Qatar to try to broker the next stage of the Israel-Hamas ceasefire. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paul.
Okay, enough basketball talk. Pharaoh got me into this. It's all his fault. I remember Radicano, who was like totally into Formula One. I said, John, what is it? He said, shut up and pay attention. Now I'm addicted to it.
Yep.
And I'll be up at 1 a.m. for the qualifications for the race tomorrow. Paul, the original rights, like 2 cups of coffee ago, they don't drink Senka. It's F1. You know, it's like fancy French press coffee. $5 million. It's exploded out to $85 million. Isn't that like change you leave on a bar
it is.
In your world?
Wait till this. I mean, Liberty Media, when they bought Formula One several years ago, I mean, they told their investors, primary reason they bought Formula One is they felt it was tremendously undervalued in terms of global media rights and sponsorships. And they thought that's where it was, and that the prior ownership did not do a good job of that. So what they've been doing has been renegotiating everything, every media rights
contract by contract.
Yep, and every sponsorship, and it's going to be a slow build, but they've had already some step function increases.
And next year, Cadillac.
Yeah.
Well, you think they're Carl F. Finns?
Yeah, exactly, from back in the day.
Cadillac will be there next year. Anyways, it's in Australia, and all I can say is I love the British coverage. It's so superior. You can see it on ESPN, and they'll have the real British announcers doing it. It's Australia, and then Bahrain, and then they go. I don't know. They go
cars all over the place.
They go. I don't know. They change a lot of tires, is what I know. Futures up 56. We say good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Lisa Mateo, Michael Barr. It's a Friday. We're getting through. Busy with looking for headlines to come out. Part of those headlines are at a G7 finance meeting. This is downriver the St. Lawrence Seaway out of Lake Ontario past Gananoque and the Thousand Islands to Montreal, Quebec City, and Charlevoix is where the elite meet to greet on the east coast of Canada. We're trying to hook up with David Gura right now. Yesterday, I mentioned within a good discussion on fiscal responsibility, the courage of previous commissions where nothing got done at the end of the day. And one of those commissions was the real leadership of Simpson Bowles. Yep. Alan Simpson has died at 93 years old. I can only say that many times I interviewed him, Paul, you could hear his childhood in it. Mm-hmm. This kid grew up 1,000,000 years ago in a rural, tough Wyoming. Yep. And, he enjoyed some jail time.
Yes.
He grew up really tough.
Okay.
Like really, really individualistic and iconoclastic. David Gura joins us here in the memory of Wyoming's Alan Simpson. David, he was quite a politician, and I would say more influential than the credit he got from a rural state.
He was a proud son of Cody, Wyoming, and I often talked to him while he was there in his later years. And of course, I think what he'll be remembered most for by a lot of folks is the work that he did with Erskine Bowles on the so-called Simpson-Bowles Commission. This was an effort that was started by President Obama to work on the federal deficit, and the two of them represented a kind of comedy across the aisle that we don't see much of in Washington these days. But what I'll remember most is just his wryness, he told a great joke, he spoke plainly, and he wanted to get things done. And I think as you look back on his legacy, it'll be that commitment,
right?
Yes, to the politics, but more so to trying to make a difference in Washington, while always remembering, of course, his roots in Wyoming, Tom.
Is Secretary Rubio at Charlevoix and onward, frankly, is he being wry? I've never used that word before. When you're with Guri, you use that word. How's Secretary Rubio doing? And does he need a little Alan Simpson 101?
Yeah, I think that he's trying to find his role here. And so he's somebody who obviously he enjoyed the support of a few Democrats when he got this nomination. They know him from the Senate, know from his work on the Senate Foreign Relations Committee. But he occupies a very difficult position now because while he is the U.S.'s chief diplomat, there are a number of envoys the president has put in place who are kind of competing with him for different topics in the foreign policy remit. So I just look at what's happened over these last few days. Secretary Rubio made a trip to Jeddah in Saudi Arabia for those talks with the Ukrainian leadership. Steve Witkoff is the person who went to Moscow to present that plan to President Putin. And so I think that there's an oddness to this moment where there are these kind of bilateral conversations happening about the end of the war in Ukraine. Secretary of State Marco Rubio, obviously the person who nominally is in charge of all of this, but he really has to work with Steve Witkoff and others to get this done, and I think he's trying to figure out how to do that. And just one more comment about him in that role. I think people are looking at him here. Many of these diplomats know him from his work in the Senate, but the open question is how much is what he says representative of what the president thinks and what the president wants to do, and they all know that he could say one thing and a few minutes later everything could be turned on its head.
David Gura, safe travels. David Gura in Charlevoix. Downriver on the St. Lawrence Seaway out to the, I believe it's the Bay of Fundy. I've never been up there. Have you been up there?
No, I've said it for many years. Long weekend, Quebec City. Everybody raves about that. It's a great opportunity.
It's quaint.
It's
Montreal's
fantastic.
like urban and, you know, like a big city. And
everybody raves about it. It's so close to New York.
I've never heard a negative word about it.
Yep, same.
Just a few years ago, it was the Quebec Aces.
Oh, really?
American Hockey League.
Okay.
They were different.
My French isn't very good, so that
the least. Futures up 53. We've got a very good morning coming up here as well with Michigan at 10 a.m. We'll see what the headlines are out of Washington as well. Jonah Osborne, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. A Friday, an active Friday with your political economy, your economic politics as well. We're going to continue the discussion. As Paul notes, as we get later into the morning, we will look for headlines within this tumultuous time. Right now, Paul, the VIX under 24, 23.90 goes one way. Gold, $3,004 per wow ounce.
All-time high intraday here. Got up to $3,017 here. So that flock to gold just continues unabated.
Mexican peso threw a big figure, 21.20 down to 19.97.
Yep.
Stronger Mexican peso as well. Looking at the loonie gives me stronger too, a 144 level in loonie. Thanks to David Gura for being at the G7 meetings. Bloomberg surveillance. This morning we're brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. And again, we thank IBKR for their valuable support as well. Equity markets. What do you think, Paul? We had Sam Stovall on, and
what we've had, Tom, is just seemingly for the last 3 or 4 days, and John Stoltzfus is sticking with his 7,100 target on the S&P 500, so we appreciate the conviction there. But what we've seen pretty much the last 3 or 4 days, this is a market, when you look at the futures, it wants to move higher. It wants to bounce. It's been, a 10% pull down or drawdown in the S&P 500. It's looking for a bounce, but the news flow just tends to overwhelm that bias there, and it's just something more on the tariff front. And there is news every day, and that seems to overwhelm the desire for perhaps a short-term bounce here.
Rule 1, folks, is this thing catharsis, and everybody's got a different theory, and nobody cares what my opinion is, but the answer is the way you clear a market is catharsis, like panic, like blood on the streets, and that. In report after report I see, Paul, is it's not there.
No.
Like we don't have, Gura's up in Charlevoix.
That's good enough for me.
Good enough for you?
That's the best I can.
And they had catharsis last night because they ran out of Labatt's.
Yeah.
That's what happened. But we don't have catharsis in this equity market, from what I can tell.
No, and
30 VIX.
And what 30 is a name that's been called out by a lot of strategists. Another thing that you tend to think of is big volume on the big down days, and we haven't seen a just crazy volume that would say, hey, we're capitulating.
Can we pause for a moment?
Sure.
Last night, I had to miss the book party. I had a massive family commitment. I was basically told it was divorce if I didn't go. Barry Ritholtz, a book party.
Oh, excellent.
For his new effort. Talk about timely.
Yes.
Let's put the book out when everybody's in a total panic about how not to invest.
Right, exactly.
It's like he couldn't have choreographed it any better.
No, he knows.
5 or 6 people showed up. I heard it was great.
It's great stuff. I was been perusing it, and just don't make these mistakes is basically the subtitle of that book.
Josh Brown showed up.
Oh, good.
Kaylee Cox showed up.
Yeah.
3 other people from Ritholtz Management. It was a great book party.
Exactly.
I'm kidding,
good for them,
folks. I hear it was hugely attended in our thoughts. What we're going to do here, we're working the schedule right now. Henrietta Trays has been a huge advantage for us in Capitol Hill. Henrietta, I came out of this family event I had last night. I'm kidding, folks. It was fabulous. I can't say enough about the Teachers of America, the commitment to kids. Henrietta, I came out of this thing and started pounding profanities on a street where people don't spout profanities because Senator Schumer stunned me. Was Henrietta Trays stunned by Senator Schumer joining the Republicans?
Don't set me up like that. I love profanities in the street. No, we weren't very surprised. Democrats generally do not like a shutdown. My odds were high for me, but still maxed out at 25% that we were going into a shutdown this cycle. My expectation is that Democrats looked at what would occur if the government did shut down and saw a much worse scenario. And so Senator Schumer did what he thought was right, which is pick this fight for another day, save it till the debt ceiling.
Do you agree that if we did a shutdown tonight at midnight, 1 hour before the qualies in F1 in Australia, do you agree that it would have been chaos for the Democrats if there'd been a shutdown?
Yeah, because there really just is not a path to reopening the government. And when you have a president who doesn't care if the government is shut down, which I think we've arguably
come on, Henrietta. Come on, a shutdown like they're going to shut down Newark? Sweeney's got the Gulfstream out at Newark and he can't take off, and the president's not going to stop the shutdown?
Well, this president shut the government down for 35 days in 2018 through 19, and he was pretty comfortable with it. And this time around, I think the messaging is more important than the actual disruption. The messaging being the government's too bloated. We need to shut it down anyway. Doge is off and running. I think they had their litany of bullet points lined up to go. So absolutely, going into not being able to go to the parks and whatever, it's a very big deal. But
Henrietta, stay with us right now. We're going to go to Margaret Brennan, of course, Face the Nation, Sunday morning on CBS. We'll come back to Henrietta Trace in a moment, but we're thrilled that Margaret Brennan could join us on Bloomberg Radio Sunday afternoon at 2 p.m. as well. Margaret, do you have Senator Schumer on the show on Sunday?
No, we don't, but we are watching what happens today. I guess the whip, Barrasso, just said the first procedural vote will be this afternoon around 1 o'clock. So we should know mid-afternoon what our fate holds here. But for the Democratic leader to say he's moving ahead with cloture, it indicates he thinks he can get, 6 or 7 Democrats on board.
But Paul Sweeney asked a smart question this morning, like, okay, if Schumer just blew up his credibility, who's running the Democratic Party? From where you sit at CBS, where is the leadership of the Democratic Party, Margaret Brennan?
Well, in the House and Senate, they said, let's just not get blamed for shutting down the government. That's what their leadership said. But there's clearly a divide within the party on whether that's the best strategy here, because this is the Republicans effectively jamming the Democrats on signing on to, cuts to programs that they're not necessarily comfortable with. So the test of this is, what is the public message that's received? Is it better or worse for Democrats to be blamed for shutting down the government, even though Republicans are the ones in control of the chambers and the White House? Or, do they risk owning some of these cuts to programs or failure to renew programs? And that's the messaging game they're on here. We're going to talk to Senator Lindsey Graham about what happens next, because even Graham, a Republican, is out there saying this package is insufficient, particularly when it comes to defense spending. The Republican leader, Thune, has charged Lindsey Graham with trying to get this reconciliation strategy going of 2 bills.
Margaret Brennan, as you know from your time at Bloomberg News, we focus on the markets here, and the markets are really reacting as if they do not like this uncertainty that's coming out of Washington in terms of economic policy. What's the feeling within D.C. about how this is all unfolding?
Right. How does a forward-looking pricing mechanism price a policy that changes by the hour? I know. Welcome to Washington under President Donald Trump. There has been, and I've said this before on your program, a failure to appreciate that the president actually truly believes in tariffs and putting them at the heart of his economic policy. Everything else is just managing how much he implements them. That's what his advisors seem to be doing. Howard Lutnick will be my guest, the Commerce Secretary, on Sunday. So we'll see where we are with those policies by then. We will have a new Canadian Prime Minister in place as of today. Right. We have European leaders who are already talking about concerns of what's coming their way. We want to talk to Lutnick to get some clarity.
Margaret, before we let you go, this came up, and David Gurrow's worked with her for years. Where in God's name is Susie Wiles? Has she disappeared from the Trump orbit? This is the woman that provided continuity and clarity. She's got some tangible cred besides understanding the National Football League through the Summerall family. Help me here. Where is Susie Wiles in all this, Margaret Brennan?
Oh, she's very much there. She's managing the president and access to him, but for people who say personnel is policy, where's the Gary Cohn in this administration? Scott Bessent doesn't seem to be able to, take the tariff paperwork off the president's table in the same way that others.
You're the second, Margaret. I don't mean to interrupt. This is important, folks.
President Trump learned from that. We talked so much about that how much he hated being managed by the staff he had during the first administration.
This is the second time I've heard this.
He doesn't want to be managed.
Margaret, I've heard this in
and so it is hard when there isn't a policy process. This whole protocol that presidents go through of coming up with the strategy and implementing it is there for a reason. It also helps the markets with predictability. That's not how President Trump works. It's ad hoc. It's his gut. It's what he says. And you have to believe him, because those who run the agencies may not actually be in control of the policy.
Margaret, we're out of time. Got to run, but this sounds wonderful with Senator Graham. Look for Face the Nation, the CBS network, Sunday morning. On Bloomberg Radio, Sunday afternoon. Listen to Face the Nation Sunday at 2 p.m. This in New York, in Washington, and 92.9 FM in Boston as well. Face the Nation is as well. That's the second time I've heard that this week. That the Treasury Secretary is trying to figure out where he fits in
exactly
to the headline derby is that's a doorbell to the studio that I think I just heard there as well. Is Henrietta Trey still with us? Can we go back to Henrietta?
Yes,
Good.
awesome.
Henrietta Trey's just listening to that with Veda Partners. Henrietta, thank you so much for waiting for that as Margaret stopped in. The process here of the White House, Henrietta, how does it fold over to Republicans on Capitol Hill?
I think you bring up really good points with Margaret on Secretary Bessent not being in charge of the flow of information between the agenda from the White House that is really making a lot of points that do not have legislative realities, and that's redounding to the Republican conference. So, for example, the tariffs are very much in effect. They are escalating across the world throughout the next several months. But at the same time, the White House is talking about tax cuts. But the point that I'm trying to make to investors, because I think it's critical, is that there are no tax cuts in the Republican agenda. It costs $4.6 trillion just to keep the status quo. And the bill in the House allows for $3 trillion in spending. So we have a material disconnect that I think Secretary Bessent is telegraphing without any context or legislative text to say that the tariffs will be offset by deregulation. Well, deregulating crypto is not enough to offset a 200% tariff on French wine. You know what I mean? And I think that that is the biggest shock still to come to the market, is that there is no tax cut in the works. And so what's happened is the Treasury Secretary and other folks at the White House are now starting to tout this idea of cutting taxes or eliminating taxes for everybody that makes under $150,000 a year. To say that that's unrealistic and entirely unworkable would be the biggest understatement I've ever said. There is no plan to cut taxes to offset the tariffs.
Henrietta, you mentioned earlier that maybe Senator Schumer said, hey, we'll fight another day here as opposed to shut the government down. But I actually thought this was, in fact, the time when folks were saying that the Democrats can stand up to President Trump as it relates to the budget. So is there any scenario where this Democratic Party in Congress can, in fact, challenge this president?
Well, I'd say two things. I'd say the first thing is that the president's power over the House Freedom Caucus has required us all to update our whip counts.
Okay.
If we went into this debate thinking that Speaker Johnson was going to have a difficult time, and he did not. The combined, 1-2 punch of Donald Trump, who is incredibly popular, with Speaker Johnson created a scenario where none of the Republicans, save Thomas Massie, are willing to stand up to him. That makes the job of the senators, especially given they had, crunched timing. They got jammed by the House, and we're looking at a 12-day recess. These guys do not like to mess with their recess. So that was the first. The next thing that Democrats really have to do is to stress this narrative around Elon Musk cutting Social Security and the House budget cutting Medicaid, and then the debt ceiling. So those are really the three things: a messaging piece, and then the debt ceiling, which Senate Republicans don't want to include in their reconciliation bill.
Have you seen any legitimate work of how much the stated tariffs will bring in? I mean, if we put a tariff on Veuve Clicquot, are you having that for lunch, Paul?
I might.
After the Michigan numbers?
Yep.
Okay, please invite me to that lunch.
Do we know how much money's coming in off the tariffs?
Right now, the trajectory at CBO is $74 billion. We've seen tariffs escalate on steel and aluminum. It's all relatively very new. This is only a couple weeks old.
Fair.
So there's not updated, refreshed data. They're going to be reliant on that data in a couple different ways as we get into the summer months and seek scores for the tax bill. There's also probably the more salient point, which is that a couple of these pieces are going to be voted on in Congress and permanently codified. So, for example, the Section 301 tariffs on China, which right now are 20% higher than they were just 2 months ago, are going to be something that the president and the Republicans in the House and Senate vote to maintain permanently. So that's a really big component in terms of your manufacturing, but haven't seen the numbers yet.
If we raise the prices of Michael Barr's Swanson TV dinner from China, doesn't he decide not to buy it and go do something else?
In theory, months from now. The question really is how much of this pain hurts the entire global supply chain, hurts the U.S. consumer in the near term while he figures out what to get aside from Swanson and finds an off-ramp. But in the interim, we've heard from Walmart that, 60% of their imports are coming in from China. They have a 2% margin. They're passing the cost on to the consumer. And that's going to be a permanent part of our landscape.
Henrietta, when your mother served you Swanson TV dinners as a kid, did she force you to eat this thing that was called spinach?
Okay, hold on. My mom's from North Carolina, and she's an incredible cook. She would die if she heard you say that.
Thank you so much. Henrietta Trey's made a partner with a mother unlike mine. Folks, I was weaned on Velveeta cheese and the Salisbury steak of Swanson TV dinners. Right now with the news, the future's up 49. Always perfect childhood meals, Michael Barr.
Thank you very much, Tom and Paul. Senate Democrats appear to have changed their minds in a bid to stop what they call a bad continuing resolution that keeps the government afloat until the end of the fiscal year in September. Senate Democratic leader Chuck Schumer says there will almost certainly be enough Democratic votes to advance the House continuing resolution funding bill.
While the CR bill is very bad, the potential for a shutdown has consequences for America that are much, much worse.
The government will shut down after midnight if Democratic senators oppose it. A federal judge overnight ordered 18 agencies to rehire thousands of probationary workers fired by the Trump administration. However, the Trump administration is pushing forward with those cuts. Thousands of workers have already been fired across the federal workforce. In the middle of the tax season, there's word the IRS is now expected to cut 18,000 jobs by May 15th. It got heated when Republican Congressman Chuck Edwards returned to his North Carolina district for a GOP town hall with constituents. It turned into a tense exchange over how Republicans and President Trump are running the country. Edwards faced questions from people about possible cuts to Social Security, the VA, federal layoffs, and Elon Musk's Department of Government Efficiency.
Detail 5 things you've done this week to protect our democracy.
Edwards was often shouted down by his constituents, but he continued with explanations about waste, fraud, and abuse, and a defense of Republican plans.
I was proud to vote recently for the House budget resolution, which provides the framework.
He became a political legend whose quick wit bridged partisan gaps in the years before today's political environment. Former U.S. Senator Alan Simpson has died. Along with former Vice President Dick Cheney, Simpson was a towering Republican figure from Wyoming. Alan Simpson was 93. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul.
Thank you out on YouTube live chat for reminding me of Senator Simpson's eulogy to the older Bush, George Herbert Walker Bush. I will go back and look at that if I can find the time this weekend. Futures up 47 right now, and a Friday. It's not a warming Friday, is it? Like we had a full moon lunar eclipse thing, and none of that happened.
I was thinking of breaking the Vespa out of winter storage, but I'm not
there
sure. I
you
might
go.
wait another week.
Option that.
I might wait another week there.
But that's the spirit, right now. But like the Vespa, I'm thinking Italy.
Oh, yeah.
Tariff?
Sure.
I mean, if they're putting a tariff on Harley Davidsons over to Europe, which is un-American all by itself, but do you put a tariff on a Vespa?
I think that might be subject to it. And how about my Italian wine, my Barbaresco, my Nebbiolo?
And then
there.
Do you buy less?
That's a problem.
Do you just say, I'm going to pass in the Vespa? I don't understand where economic growth goes on this.
I don't know.
Like consumption, like confidence.
Yep.
I don't have I'm not trying to be snarky. I just don't know.
No, I don't know. So we'll see. But it all comes in, as Margaret Brennan was suggesting, about what actually gets implemented as opposed to what is the soundbite or what is the tweet. Yeah. But President Trump seems very, very, as again, Margaret Brennan said, he believes wholeheartedly in the power of tariffs to achieve many goals. So I think we should get used to it.
Thanks to Ernie Tedeschi, the Yale Budget Lab. We got a huge splash on that yesterday. Yep. It's really interesting. I mean, I'll be honest, it's new to me. I'm just getting into it, but he and the team there have really put out in the last couple of days some articles in English which actually try to codify the headlines that are coming out on tariffs. My head is spinning on it. I know yours are too, but thank you to Ernie Tedeschi and the Yale Budget Lab for their efforts yesterday. Futures up 49, the VIX under 24, 23.93. Bloomberg surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo. Thank you for being with us in your commute across the nation. Good early morning on the West Coast on Apple CarPlay, Android Auto. SiriusXM. We don't talk enough about SiriusXM.
Boom.
It's like ancient technology.
Alexander
Graham Bell had it.
It's in my car. I'm a
Is it in your
SiriusXM.
car?
Yeah, I'm a big Howard Stern fan. Been
Very
since
cool.
the beginning of time. So
You listen to Howard Stern and not me?
nonstop.
Shocked.
Nonstop.
Howard Stern had on, who did he have on the other day? My brain is frazzled here. It was just, it was maybe Don Henley. I can't remember. It was fabulous.
Yeah.
You know, it's just really good. Good morning to Mr. Stern and Company as well. Futures up 49 is a lift to the market. The VIX comes in 23.90. We're going to get to the market opening in a minute. But right now, sort of to get the economic cast that's out there to get to the Fed meeting next week, Anna Wong drops by, chief U.S. economist with Bloomberg Economics. So you're one of the fancy people at the Fed, Anna, with your fancy Chicago PhD, and Jerome Powell turns to your fancy binder and says, what in this tells me what to do March 19th? What statistic, what study matters right now?
Trade policy uncertainty and tariffs effect on inflation. So, you know, Tom, I think that there's a big risk that next Wednesday, the FOMC will mark up their core PCE inflation forecast sharply. As you remember, last December, they already surprised the market by sharply moving up their inflation forecast. But I think they could even further raise it because I think this week, the CPI and PPI data already meaningfully moved the forecast trajectory of core PCE up by about 0.1 to 0.2 percentage point. And on top of that, some of the new papers that came out of the Fed suggest that their thinking about the effect of tariffs has changed since the last trade war. So since in the last trade war, the Fed staff was thinking that, well, the intermediate goods tariff does not have a persistent nor even a level impact on inflation.
Right.
But this time around, the new research coming out from the Fed suggests that even tariffs on intermediate goods could be more persistent than even tariffs on consumption goods.
Well, Paul, you ready for my math? This is PhD.
Yep. Okay.
If they do 3% inflation over 3 years, that's 9% inflation.
Okay, I'll go with that.
I do okay with that? Thank you.
Anna, so what is your concern, or how do you think these tariffs will be reflected in this U.S. economy? Let's just say over the next 12 months. How do you think the impact will be seen and felt?
Well, you know, Tom is a big fan of Chicago, right? And price theory in Chicago, the underpinning of price theory is the concept of elasticity, and how these tariffs will be passed on, or whether they will be absorbed rather by squeezing firms' margin and therefore the stock market, depends entirely on the elasticity of the goods. So take the eggs that we have seen. I mean, we all know eggs prices have increased by over 100% since last year, but the demand also has dropped significantly for eggs, even though eggs are supposed to be inelastic goods. So ultimately, eggs prices fall, even though there's only very marginal improvement to the supply shock on eggs. I think eggs give us a glimpse of the price sensitivity of this economy right now, which is that people are very squeezed and they will have a hard time taking any price increase.
Good morning to Steve Levitt, and of course, Freakonomics. I was honored to do his first interview with Freakonomics 1,000,000 years ago. At Chicago, folks, macroeconomics is called do more microeconomics. That's sort of the way they roll out there. I don't buy it for a minute, and our audience of listeners and viewers go, okay, eggs is substitutable. I'll get it. You can't substitute rent. You can't substitute the auto payment, the lease payment. If the kid has to go to college, you can't substitute it right now. What is the elasticity for America right now? Flat on their back in non-substitutable goods.
Yeah, so unfortunately, you're right. So you're right that those things are not substitutable, but they are services, so they are not directly taxed. So the trade war, actually, so what happened is that with higher taxes on goods, which are substitutable, which there are substitutes for, people will be pivoting away from those goods, but because they have to spend on those insurance, those healthcare insurance, those things that you just mentioned, and electricity bill has been surging this winter. So I think what we're going to see is a lot of it.
Right.
I mean, firms will try to pass through these tariffs, but they will try for sure. But in a couple of months, they're going to be able to see that the demand would have plunged for those, and as a result, total profits will fall, and I think the stock market, which means that will be taking the brunt of the trade war.
Do you have a headache? I mean, Dr. Wong now is killing me. This is like undergraduate. You think you're going to pull a quality B with Dr. Wong, and you're popping a C- 3 weeks into the course. I guess we'll come back with Anna Wong, our chief U.S. microeconomist here at Bloomberg. The bell. We are open. Paul, we're doing the data check you and I can't do because Lisa's not here today. Yeah. Up 234 is the first print on the Dow. And again, my headline is the VIX under 24.
Yeah, exactly. The S&P up 49 points. That's 0.9%. NASDAQ, Tom, just opened up 229 points, 1.3% for the NASDAQ. So green across the board. This is kind of what we've seen over the last several days here. We opened strong. The market wants to move higher or wants to bounce, but at times it'll be overwhelmed by news of the day.
10-year real yield, we haven't talked about that all day, back up near 2%, 1.99%. I'm going to call it a churning market, a better tape, awaiting the next headline. Do you think, did we do okay there?
Yeah, I think we did okay.
Okay, Mexican peso through 20 shows strong Mexican peso today. We continue with Anna Wong, microeconomist at Chicago. She's now Bloomberg U.S. economist as well. Okay, on elasticity, at this Fed meeting, there's going to be the inelastic dot plot, which is actually a physical plot. Should we put any credence, Dr. Wong, into the dot plot?
I think the person who would disavow the credence of the dot plot would be Powell himself at the press conference. So to be clear, I do expect that the dot plot would be pretty hawkish. And in fact, if FOMC median does revise up inflation as I forecast, there's a big risk that the dot plot will show only one cut in 2025. But then Powell will come out in the presser to say that, well, things change. The dot plot does not mean that we're going to follow this policy for sure. So Powell is actually a very politically savvy person, and I think the dot plot will make it just look really bad for them from the Trump White House perspective. And I think Powell would want to strike a distance between himself and a dot plot.
One final question. On the back end of the GDP function is the dynamic of exports, we're moving out, and imports coming in. Do you have a clue what NX looks like?
So NX right now is looking like it's widening. The deficit has been widening very sharply in the last 3 months because of the front running of anticipated tariffs. But it is about to come crashing down because we're next week for retail sales, we're going to see that consumption demand has really pulled back after, 3-4 months of very strong consumption. So that means that imports going forward should be coming down. And that actually fits with the elasticity of trade as well, that with tariffs going up, you're going to see a very sharp decrease in import quantities.
Anna, thank you so much. Anna Wong, with profound impact in the study of economics this year, talked about all across global Wall Street with her great work. She's our chief U.S. economist here at Bloomberg Economics. What's the inelasticity of the starting five for Duke tonight?
Yeah, I'm not sure who we're putting out there.
a little more inelastic, right?
Yeah, next man up. I don't think we're going to see Cooper Flagg for the remainder of the ACC tournament, and hopefully he'll be back for the big dance.
I'm ignorant on this, folks. Let's go here. I'm sure many of you are way smarter than I am. Paul, on any given D1 bench, how many people are on the basketball team? Like 15 people?
Yeah. something
And
like that.
there's partitions. There's
Yeah.
like a few stars.
Yep.
And then the guys that play with them. What's after that?
Number 6 through 10 for Duke, I think would be a top 10 team in the country.
Really?
That's how deep Duke is.
So
I mean,
they-
they got 5-star recruits that played 2 or 3 minutes
There's
a
a
game.
guy that's
But now
number
they gotta step up.
12 at Duke that
Yep.
chose to go there for great education. Good morning, Mr. Rubenstein. Okay. And they get like 2 minutes playing time.
Yeah.
And they would be at another D1 school.
Yeah.
The best player?
Yeah. I mean, that's how deep this Duke team is. And so I think they're
Interesting.
going to be, I mean, obviously you lose the best player in the game, in college game, you're going to be definitely weakened, but they're still good enough to win the ACC. They're good enough to go really deep into this tournament. And if Fly comes back, they're still the odds-on
So
favorite
to
to
be
win
clear here, if they lose the tournament, they'll still be in March Madness.
it. And be a number 1 seed.
Even if they
in
lose
their
the
region.
tournament?
Yes.
I don't understand it, folks. It makes Formula One look simple. I don't know who Sir Lewis is with. I think he's with the red team. We'll have to see. Dow up 153 points. Bloomberg surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. The Dow up 207 points. Again, the VIX nicely under 24 this morning. Bloomberg surveillance across the nation. Good morning on the East Coast. Brought to you by the Jewish Communal Fund, JCF. They help you respond to crisis swiftly. Open your JCF, a donor-advised fund now, to secure your tax deduction. Visit jcfny.org. Call them, this is locally, call them 212-752-8277. 212-752-8277. They do a wonderful job. Guess what, folks? This is really the most important discussion of the day. Sheila Kahuglu is with Jefferies, and she brings in bulletproof engineering cred along with her economics. It's on the airline industry. We're going to talk about the state of the industry now. But Sheila, I'm just going to cut to the chase.
Sure, Tom.
Every house on the East Coast is looking at the tri-state area. On my place, I've got a lovely place, folks. I counted 12 airplanes in the sky like a couple weeks ago, a record amount. Airline safety in Denver the other day, here the other day, the horror of what we saw in Washington. People are really falling apart in this. You've got engineering cred. Do you believe in the system?
I do, but I also think this is where our airline and defense coverage come into play.
Exactly. That's why we're here.
Yeah, I met with.
They didn't tell you it's a 4-hour conversation.
I think it's very important, with the DOGE cuts, which have impacted defense, whether it's the manufacturers or the service names, to realize how important government employees are actually to the system, within the system of the U.S. I understand a 5% headcount cut that exists at banks all the time, but to do it within government employees where we tend to be understaffed, the FAA, as an example, air traffic controllers in Newark are understaffed, and we're flying 40% more passengers through that airport, as an example. So to fire 5% of them in a blanket, layoff does not seem to make sense. And a lot of the companies that have been hit, SAIC, Parsons, Raytheon Technologies, Leidos, actually provide systems for the FAA.
Do those people, Paul's got the Gulfstream to Scottsdale here in a couple days.
He'll be fine.
Out of EWR, do the flight controllers have the power to say, we don't have enough people, we can't do our job?
You know, I know both the former administrator, Mike Whitaker, FAA administrator, as well as Dan Elwell under Trump administration #1. I do think there's areas where we could cut air traffic controllers. Perhaps we don't need them from 12 a.m. to 6 p.m. when there aren't 12 planes in the sky above your backyard. But, you know, we might have to fulfill more funding. And also technology. The data, there's a lot of data that the FAA has. We just need the technology to mine it. And so cutting these service contracts don't necessarily make sense.
Sheila, earlier this week, we had a number of the major airlines cut their earnings forecast, their guidance outlook. What happened? Because it seems like when I'm thinking back to the earnings last season, I didn't hear much talk about that. What happened in the last couple months?
I think the drastic change is what's scaring folks. So, and it wasn't one thing. That's what I think is concerning for folks. So first, it was the safety issues. So let's close up on that. Whether it was Delta or American, it put these airlines on a marketing hiatus where it doesn't make sense to put out, fly for free tomorrow. Second, corporate travel. We've seen that tightening, whether it's our clients as well, paralyzed by what's going on in the markets. They can't leave their desk, so it maybe prohibits a work travel trip. So corporates are tightening their budget and seeing a pullback. And then third, leisure. Everybody sees what's going on with the stock market, maybe pulls back on that last trip. And then fourth, federal employees as well, traveling less.
Paul, I just looked at the flight I always look at here, and it's down $1,000.
Sure.
Round trip over to Paris.
Yeah, but
it's on sale.
The euro's, not where it was a couple months
That's okay,
ago.
but I can get tariff-free Moet Chandon there.
Okay, very good. Sheila, talk to us about the airlines. Where are we in terms of capacity? Are they where they need to be, where they want to be? Because it still feels like every plane I get on is full. So
yeah, I think we're watching the data really closely over the next 2-3 weeks. So 40% of airline earnings are in Q2. So it's go time for them. Let's see what happens from March 15th through April 15th. April 9th is when Delta reports. But capacity, to answer your question, TSA volumes are up about 1%. Capacity is flattish. So we've seen capacity tighten. That's been the story of the last 8 months. But we're seeing capacity come in Q2. Obviously, prices are down. So airlines are trying to keep their profit levels, adding more capacity. That just exacerbates the issue.
What do airlines typically do if they do see a shift down in demand, whether it's just consumer uncertainty around tariffs or whatever? What do they do on the cost side to adjust for that typically?
Very difficult.
Yeah.
You don't have many variable costs. A lot of it is fixed. Your plane is fixed, your pilot's fixed, your schedules, your gates. So very little you could do. You could maybe add red-eye flying to add incremental opportunities. That's what Southwest is doing. But that's what makes airlines trade at 5 to 7 times PE. Right. 70% discounts to the market. Airlines have not been seen as the best investment vehicles because they have very little maneuvers they could pull.
Blue button, Detroit Lions button. Then let's start there. How frothy is the business right now? I mean, is it going into one of those ugly periods where it's tough to maintain free cash flow or even revenue pop?
I think depends on the carrier.
Really?
Yeah,
it's not an industry thing.
I think some will be better off. So Atlantic is still holding in well. Tom's still checking out his flight to Paris. I think Atlantic is strong, but how long does that last if all of Europe?
Pacific right now?
Pacific is okay as well. They have very limited capacity. Luckily, Boeing is not delivering many 787s. Airbus isn't delivering many A350s.
Your single best idea right now?
I actually think Boeing, despite tariffs, despite macro, despite everything. Wow. Folks were, the equity offering was oversubscribed when Boeing had $55 billion of debt. Now they're down to $25 billion in net debt. Stocks at the same exact price. Folks have waited 6 years for planes. Airlines are not going to cancel yet. And then the aftermarket, put in a GE or an FTAI. FTAI is a SMID-cap name I cover. It's been, hurt by a short report out there. So that's the other one I throw in.
Well, on Boeing, how do American companies, as United, Delta, the others that you know better than I do they want to buy Airbus? Or is it just like, we can't buy Toulouse, it's un-American?
No, they do. I mean, but the U.S. is only 20 to 25% of the skyline. It's not 50%.
Boeing's selling to who then? Who's their dominant? Who's their biggest?
It's interesting because this is why I think Boeing's quite interesting, as well as Airbus. We have 175 operators buying planes in 2025. That is very well diverse across the globe.
Where is Boeing in terms of, I've been told by a lot of folks, what drives this name is going to be the number of deliverables on the 737.
That's all that matters.
Okay, so where is the company now, and where would they like to get to? And do you have confidence they can get to that?
737 is about 50 to 60% of their free cash flow. You have to assume defense holds its own and stops losing money. But 37, they were at 20 to end the year. They're now in the 30s. In terms of production, they're still in the 25 range. They're getting out of inventory. But we have 384 deliveries for this year on the MAX. For context, they did 600 at the peak, so well below that.
I got to squeeze this in. Is their financial integrity improved? Is the systems analysis of Boeing? I got free cash flow negative 14 gazillion, another year negative 14 gazillion, now negative 5 gazillion forward, and then finally they flip positive in 2026. What's the integrity of that guess?
It's defense. Defense has lost $3 billion. 777X has lost $4 billion development programs. And then, of course, you had the strike. You had delays given Alaska.
How is it
so you gave away
around?
free aircraft.
How is it turned around? How'd they fix the damn rivets that fell out of the airplane?
It's interesting because I was in Charleston 3 weeks ago. That's where they manufacture the 787s. They do the 737s up in Seattle and Renton. Got reported by a Boeing employee for my shoes not being suitable for the factory floor. And I was like, this is a very stark change to how it's been. You know, they're very, the FAA is integrated into.
Wait a minute, were you wearing Christian Louboutin? Well, who
no,
were you
I was wearing, I won't give the brand, but I was wearing
Please,
flats.
it's surveillance. Give the brand. We do luxury.
Yeah, no, it was ballet flats. And so.
They wouldn't let you on the floor with ballet flats?
They gave me an exception, but I was scolded.
You need a hard toe thing.
Do you buy them? Okay. Do you buy the ballet flats on Madison Avenue at a store? If you go in the store, you can only come out with 3 boxes. I've learned that.
Yeah, but they
wouldn't let you on the floor in ballet flats?
Nope. I had a solid talk about appropriate
Well, that's good.
manufacturing
That's
shoes.
what you want to see, right?
So that comes back to my engineering. I gotta step it up a notch.
The new Boeing. That's all I could say. Sheila, thank you so much. Sheila Keaglu with us with Jefferies. They're managing, and I love it. The real engineering integrity there on the aviation business. You heard it. Single best buy. Boeing up 2 at 161. The Dow up 404 points. The VIX in a one big figure plus. The VIX 23.18 as well. Excuse me there. On a Friday on YouTube, subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene sliding through the day. We do better when someone walks in with a 122-year bottle of bourbon. Joining us now, surveillance tariff liquor expert Tim Stenovec. Is there going to be? Was this tariff-free? This bottle that you've got with you?
So far, it's tariff-free. This is made in the U.S. It's a question of where you buy it.
You have to pay a tariff from Kentucky to here?
No, this is from Michigan.
Michigan?
Yeah, of all places.
Okay. What do you got?
This is Joseph Magnus Cigar Blend Bourbon.
Do
you guys have a camera? Do you guys have cameras in here?
That's right.
This
We're
is
YouTube.
It's on YouTube. Okay.
That's right.
This is from Craft Co. They're a brand that has about half a dozen different types of alcohol. And we're going to be speaking to the company's CEO, Allie Anderson, a little later today.
This could be good, right?
This brand...
Well, there's only one way to find out if it's good.
This brand is from 1903, the year Ford Motor was founded. Does bourbon keep?
I'm sure it does. So that raises a question you asked about substitutability, like for a Vespa. If my Vespa is now going to be, 25 or 50% more expensive, where do I go? So the question is for you. And
well, I heard you guys talking
business.
about Veuve Clicquot a little earlier today. You can't get champagne in the U.S. that's actually champagne. It's called champagne for a reason. Right. So is there a substitute for the Veuve Clicquot?
I mean, that's where we are today. What are we were all exhausted we're deep into 2025. What are you going to do to say, besides have Carol Massar get bombed on 120?
Here's the thing. She's not even here today. Norma Linda is here in her place.
Very good. That'll be fun.
If Carol had known that we were going to have 3 bottles of liquor on the show at about 4:20 today, then she wouldn't have taken the day off.
What Tom and I do is we deliver you green on the screen almost every day.
Yeah, we'll see if it holds.
But then something happens by the time you and Carol get on the air at 2 o'clock. It's a different story.
Let's talk about that, because you guys are holding court in the activity of Washington. What have you observed in the new Trump afternoon? It's busier, isn't it?
It's busier, and nothing ever runs on schedule. So we'll get a report that an executive order is set to be signed, that it's closed press at 1 o'clock or something. Turns out it doesn't. It's no longer closed press. The press gets ushered inside. We get tape playback from the event. The president speaks for 35 minutes. And we take the whole thing because he's talking about tariffs.
Yep.
And to be fair, I remember the Clinton administration the same way. I mean, presidents vary on that.
Yeah. Well, some people are more comfortable with the press.
They're late, and other people's lates are different as well.
I was on assignment in Pittsburgh yesterday. Can't really talk about what I was doing. Okay. It's top secret. And then I find out that
you interviewed Sidney Crosby.
I find out that David Gura is in Quebec.
Yep.
In the mountains of Quebec.
Yeah.
And just hanging out in the most gorgeous place.
He's in Stovall down the St. Lawrence Seaway. It's exquisite.
And we're still allowed to go there?
Oh, yeah.
Okay.
Well, we're allowed to go. We're trying to do a remote as well. And, we'll have to see. We'll have to see about that as well.
Ted Lasso coming back.
I didn't know that.
That's news
all
you can
brand
use.
New. I mean, it's new.
I mean, Rich Truman breaking news for us.
It really helped Apple TV Plus, but you have said like Silo. And did you watch Apple TV Plus?
Yeah, I watched.
Did you pay for that?
Yeah, we pay for that. Well, it seems like every time you buy a new Apple product, you get a free few months of it. So I think that's how we still have it. My wife just bought a computer.
But we're not watching Apple TV Plus. I mean, the statistics are like, it's not there.
And they don't care, though.
They don't care. Tim is right. So they're just out there. They've got their streaming product, and but they need programming like everybody else. And Ted Lasso.
Surveillance. Severance. I'm watching Severance.
Oh.
I'm a few episodes behind. That's on Apple TV.
Okay.
Yeah.
Well, we've been watching that as
You guys been watching White Lotus?
No, I can't. That's too
I know Paul's a landman guy.
Yes, exactly. All right.
Let me do a market up here. Tim Stanovic, if he doesn't tip into the bottle here, you'll see him this
he'll be
afternoon
here at 2 o'clock.
as well. What's it called again, Jason?
This is Joseph Magnus Cigar Blend Bourbon.
Joseph Magnus 120-year bourbon. That'll be on this afternoon. The Dow up 382 points. Speaking of bourbon, it's good to listen to Bonnie Raitt with a bit of bourbon. Good morning.